Okay, good afternoon to all. Today's session is GST written, and being a two speakers, we have divided the topics. GSTR 1 will be taken by me, and 2, 3 and mismatch related aspects will be taken by CA Venugopal. So I'll just go ahead with my session, GSTR 1, and the objective of the session is just to see the provisions of the GST law as well as rules with respect to the returns, as well as how to file the return of GSTR 1, 2 and 3, and how we can use the offline utility to file the GSTR 1, and any other issues which are there to take up the same. And slide number 3. Coming to the slide number 3, the due dates of the GSTR 1, 2, 3 has been given. And as we know, in the latest GST Council meeting, the due dates of the GSTR 1, 2, 3 of July has been extended, and GSTR 1 to be filed by 10th of October 2017. However, where the turnover of the assessee is more than 100 crores, they have to file the return by 3rd October 2017. And GSTR 2 for all the assessees, the due date is 31st October 2017. And 3 has to be filed 10th of November 2017. And one more written due date has been prescribed, that is Input Service Distributor GSTR 6, which is due date is 13th October 2017, that is before filing GSTR 2. Why there is a GSTR 6 is coming out? To avail the credits which are distributed by the IST in our GSTR 2 return. Slide number 4. Okay, next is GSTR 3B. I have just given a summary of the GSTR 3B, which is to analyze what we have already filed in GSTR 3B, and if any errors are there, how can we rectify the same while filing GSTR 1 and 2 and 3. Okay, coming back to the GSTR 3B summary. If we have seen the GSTR summary, what we have filed is consolidated liability of outward supply in table 3.1, including inward liability in case of a reverse charge, which is also there in 3.1a, and 3.2 table is merely few of the details which is already included in the 3.1 is provided in 3.2. And we have to disclose ITC related in in table 4. ITC related eligibility of the credits has to be disclosed in table 4 of the GSTR 3B, and 5 is with respect to the exempted and nil rated and non-GST inward supplies. And there is one more column of 5.1. In case if there is any interest liability which is not remitted, that has to come in 3.1. And after that, we need to review the GSTR 3B, and also preview option has been given in GSTR 3B recently, and we may require to preview the GSTR 3B data whatever we have given. Later we require to submit the GSTR 3B. Once 3B is submitted, then only the table 6 is made available to the assessee to fill it up, wherein the assessee can do offset the liability by way of debiting into the cash ledger or else a credit ledger, based on which GSTR 3B is filed. Now, many of the assessees have done certain mistakes while filing the GSTR 3B. So what happens to it if the details furnished in 3B is increasing the liability or decreasing the liability, or if there is an increase in the ITC availment or decrease in availment of ITC? There was a confusion what has to be done with respect to this. So to overcome of it, the circular has been issued, circular number 7. So wherein they have given, in case there is a revision to the information already furnished in the GSTR 3B, the same can be done in GSTR 1, 2, 3 of the tax period before filing the asset return. Okay, slide number 6. In a slide number 6, I have just given one small example wherein there is an example taken is increase in outward supply. So as per GSTR 3B, my tax liability was 90,000, but when it comes to the GSTR 1, my liability is becoming a 1 lakh. So what I need to do in this regard? In case reverse situation, if there is a decrease in outward supplies, for example, my tax liability was 1 lakh, but I have discharged only 80,000. These two errors can be rectified while filing a GSTR 1. A next error or reconciliation which may be required is if there is an increase in availment of ITC compared to the actual availment of ITC in 3B, or decrease in availment of ITC compared to the credit which I have taken in GSTR 3B. This related rectification has to be made in GSTR 2. And finally, whatever the rectification we do in GSTR 1, 2, which is a statement of outward supply and inward supply, that will be that will be auto-populated in GSTR 3, and liability will be computed based on which the payment of tax, if it is increased side, I have to make the payment. If it is decreased, then it will be carry forwarded to the cash ledger or credit ledger accordingly. Slide number 7. If we see the slide number 7, the same example has been continued, wherein we have given what is the rectification method which can be done. For the first case, if there is an increase in the liability, that is 90,000 to 1 lakh, then we require to pay the increased liability of 10,000 while filing GSTR 3 along with interest. So now the question is, from which date the interest has to be computed. So in case if you have not filed the Tran 1, and if you are a normal assessee and not carry forwarding the credit, then the due date will be 26th August till the date you file your GSTR 3B with payment of taxes. In case if you have filed the Tran 1 and carry forwarded, then you are making the payment, then due date will be counted from 29th of August. Okay. Next situation was when there is an increase in ITC. I have taken only a 1 lakh, but my eligible credit is 1,20,000 as per GSTR 2 a statement. The 20,000 increase will be there in my credit register. So in case the reverse situation, I have taken 90,000 in 3B, wherein my actual eligible ITC is only 70,000 for that tax period, then the difference has to be paid while filing GSTR 3 with interest. And in case if there is a two rectifications to be made, one in outward supply, another is inward, then you have to see the net liability to be payable or net credit which has to be go to my credit ledger. Accordingly, the adjustment can be done in GSTR 3. Next, what happens if my GSTR 3B is filed but I'm not at GSTR 3B is submitted but not filed. In this situation also, whatever the details we have furnished in GSTR 3B would be reconciled with the GSTR 1, 2, 3, and if any reconciliation discussed previously is occurring, the same has to be rectified while filing GSTR 1, 2, 3 of the tax period. In case I'm not at all filed or submitted my GSTR 3B, then the assessee is required to file his GSTR 1, 2, 3, and as the payment is not offsetted in GSTR 3B, the interest will be applicable from 26th August or 29th of August, whichever is applicable. Okay, this is with respect to the GSTR 3B what we have already filed. And next, how the reconciliation can be done when we file GSTR 1, 2, 3 of the same tax period. Okay, coming back to the process of GSTR 1, slide number 10. Okay, the process has been given in a flow chart basis, wherein the GSTR 1 statement has to be submitted by the assessee who is doing the outward supply. So all the outward supply details will come and sit in GSTR1, and this has to be filed before 10th of the subsequent month. However, there is an extension for the initial period, and when he files before 10th or on 10th, after the due date, the same will be made available to the recipient in his common portal. That is, the supplies or entries entered by the supplier in his GSTR1 will be auto-populated in the recipient GSTR2A. This is as per law. However, if we see the online system, even before 10th also, the submitted entries or transaction will be visible to the recipient in his GSTR2A. However, he will not be allowed to submit the GSTR2. Okay, and it is also suggested to download the GSTR2 only on 11th of the morning, because many of the assessees may file their GSTR1 by 10th. So when we download the GSTR2A on 11th, we'll get all the details wherever the supplier has uploaded or filed his GSTR1. So once this is downloaded, what is the action to be done by the recipient? He has to cross verify it is to his books of accounts, that means purchase register, and see is there any rectifications or modifications to be done by him. So he can modify. The option of modification is allowed to the recipient, and if any of the invoices wherein he is in a possession of the invoice but it has not been uploaded by the supplier, then he can manually upload. So other things whatever he can do will be taken when GSTR2 is explained clearly. So once he does the rectifications, he may require to submit his GSTR2 by 15th of the subsequent month. So once this return is submitted, whatever the modification, rectification, additions or deletions are done by the recipient will be communicated to the supplier in GSTR1A form. So once the GSTR form is made, 1A is made available to the supplier will be having the option to accept the modification or rectification or additions made by the recipient or reject the same. So when he has to do this, he has a time of only 2 days, that is 16th and 17th of the subsequent month. So once he does this, whenever he accepts anything in GSTR1A, it will be automatically amended in GSTR1, which he has filed on 10th of the subsequent month. So after doing this adjustments, the GSTR3 is required to be filed by both the supplier and recipient with payment of taxes. Okay, this is the overview of the GST return. So next is slide number 12, where we'll go in depth with respect to GSTR1, like who has to file the GSTR1 and how the process of GSTR1 goes on. So GSTR1 has to be filed by normal assessees, including the casual assessees, not by any other assessees. So it is applicable only for 2 assessees, normal and casual, and he has to file the return by 10th of the subsequent month, and it will be communicated to the recipient. Any changes made by the recipient will come back to me in GSTR1A form, and I have the options of accept or reject and file my GSTR2 and 3. And next is slide number 13. So in case if there is any extension of time for filing GSTR1, section 61 subsection 5 will be coming into the picture, wherein the assessee is required to file GSTR3B. Presently, if we see, the extension is happened only for the July month. However, 3B has to be filed up to the period of December 2017, because there is a chances of extension of the time period for the August, September, November as well as a December. So once GSTR1 is filed, once the GSTR1 is to be filed, there is an option whether he can file through online or he can file through offline. So, and taxpayer should have active DSC to file the GSTR1, because once he submit the GSTR1 for filing, he should have a DSC or EVC. DSC is compulsory for the companies including LLP. For all other, EVC will be EVC is the option where they can file the GSTR 3B. Okay. Slide number 14. So slide number 14 as the certain specific requirements for offline utility. If assessee selects the option of the offline to file his GSTR1, then he should have the system requirements to download the offline utility and also to generate the JSON file which is required to be uploaded in the common portal after logging in. Okay, coming to the slide 15. So there is an option given where you can download your GST offline tool. So before going in depth in GSTR1, we have just given what are the options made available to the assessee to file his GSTR1 in offline tool. Okay, so we required to download the GST offline tool by logging into the gst.gov.in website. So once you download the latest version of the GST offline tool, you have to install the offline tool. So once you install the offline tool, there is one shortcut which is given in table 17 where GST offline tool. So that will be the offline tool which you will be using for the purpose of filing GST ka return. Okay. Next, coming to the slide 18, there are 4 methods for filing GSTR1. One is after downloading the offline utility, you can manually key in the data by selecting the table numbers where you want to record the data which is required to be submitted. Or you have one more option wherein there is an Excel provided in the offline tool when you download in a zip file. So that Excel sheet can be used for filling the data, and once the data is filled in Excel, the same is required to be imported into the GST offline tool, and then you may require to generate the JSON file. And third option is from the offline Excel sheet, you can copy paste any of the one table data from the header and then you can paste into the offline tool. Then again you can select one more table and paste into the offline tool. And next is CSV files for each table has been provided in the offline tool, and we can fill the data in CSV file and import the same in offline tool, cross-check and generate the JSON file. This procedure has been clearly explained subsequent slides with a screenshot help. Let us see the first option, that is manual entry in of invoice data.
Yeah, I want to interrupt here.
Yeah.
After the GST, we've been listening more about JSON, and for many of you it might be a new word which is coming up. What we have been familiar with the XML, most of us when we file the income tax department IT return, we've been familiar in filing the returns using the XML. So data gets generated into an XML format that gets uploaded to the department utility. Similarly, for GST, consider this is an XML file which is generating. The format is, it's a Java driven JSON utility. So this is called as JSON. So though it is a jargon, nothing to worry. It is just one XML type format which needs to be consumed by the department.
Okay, I'll go ahead. Once you download the GST offline tool, when you open the offline tool looks like the slide number 20. If you see the slide number 20, the offline tool, the first slide has been given, wherein I may require to click on the new for uploading the invoice data. Once I can click on the new button, Then the data has to be initially we have to give our GSTIN number, and we require to select for which year we are filing the return and for which month, and what is the aggregate turnover for the preceding financial year as well as previous quarter. That means before GST is introduced, April to June aggregate turnover has to be given. So when it's coming to the aggregate turnover, what is aggregate turnover, which is clearly defined in section 2 subsection 6 of the CGST Act 2017. So we have to read the aggregate turnover definition, and accordingly we require to compute the turnover for the financial year 16-17 as well as April to June 2017. And aggregate turnover is a PAN based turnover, and hence the entire company or entire PAN, for example, I may have a 5-6 GSTIN number, but based on one single PAN, all the GSTIN's totals I need to do and show it in aggregate turnover. And this is the only for the first time we require to show, and subsequently it will be automatically computed by the system by taking all the turnover from the annual returns filed by each GSTIN numbers. So with this, aggregate turnover will be computed on PAN basis by the system itself. Going to the slide number 22, I have given a drop down option. When you want to manually enter any data, first I need to select for which table I need to record the data. So once you select the table, the required fields will come into picture which I require to fill, and keep on submitting one after one. So next option is upload from Excel sheet. So if you see the slide number 24, I have rounded up the import files. If I click on the import files, there is one more sheet will come which is there in slide number 25, wherein import Excel option has been given. I need to click on the import Excel, and that Excel sheet which will be already provided in the GST offline tool when we download will in a zip folder. So that Excel, if the data is clearly updated in it in a required format properly, then I need to import that Excel by selecting the location where it is saved. So once I select the Excel sheet, that is slide number 28, and I require to open the Excel which will get submitted. So once it is taken, it will ask whether the data which is stored in the Excel sheet should be saved in offline tool. As a warning dialog box it will be appearing. I require to click on S to submit the to save the data in offline tool. Once I click on S, there will be another warning dialog box which will appear if there is any errors. So if there are any errors, that will be appearing on that warning dialog box. If you see the table number 30, there is one error, B2CL row number 5. So there is also the warning given what may be the appropriate or maybe the reasonable error which would have been happened. That means I need to go back to my Excel sheet and go to the B2CL, that is business to consumer larger sheet, and see what is the error which has been happened. In this case, the error is with respect to the date format. So after doing the changes, again I may require to upload the Excel sheet. When you are uploading the Excel sheet once again, if you export entire Excel sheet before importing the entire Excel sheet, you have to delete whatever is saved in the GST offline tool and import the entire Excel sheet. Or else if you want to import only with one entry of B2CL, you can import the same in your offline tool. Once the import is done, if we click on the view summary, the summary will be shown which is displayed in slide number 31. So if you see the summary and you may require, you can cross verify the same, and you may require to click on the generate button. So once you click on the generate button in slide number 32, if you see, the JSON file is created and it will ask you whether to open or save the same. So if you click on the save, it will ask where you want to save the file. So you can click on the location where you want to save, and accordingly you can save the JSON file. So once the JSON file is saved on your system, the next part is you have to log into your account in the GST portal. So once you log into the account in slide number 34, if you see, I may require to click on the return dashboard and select the period for which I need to file the return. And once you select the period, it will automatically direct you for GSTR1. And again, I may require to click on the file offline. So when I click on the file offline, it will give you an option to import the file, wherein I require to click on the choose and import the JSON file from the place where it is saved. So when I import it here, if we see in a screenshot which is there in the slide 31, there is an error remark which has been given. If you see, the JSON created for the month and uploaded in the selected month is not matching. For example, when I created the JSON file, it is for a July month. So in case if I select by mistakenly September and go ahead with the importing the JSON file, it will give you an error. The JSON file created for the month and selected in the online portal is not matching. So that means I'll come to know what is the error I have done immediately, and I can go back and select the proper month and re-import the JSON file. Once it is done, if it is clearly comes processed and in the remarks column, that is error report, if NA comes, that is not applicable, that means all the data submitted in the offline tool generated in a JSON file has been accepted by the common portal perfectly. If there is any error report, then error report will be displayed in error report column, and I may require to click on the hyperlink provided, and system takes certain time to generate the error report. Initially there was a 1 day time which was taken to generate the error report. So once the error report is downloaded, again that will be downloaded in a JSON format itself, and JSON format is not be read by the common man. For that example has been given in slide 38. So what we need to do is again go back to your offline tool that is given in slide number 39 and click on the open downloaded error report. And once you click on, it will ask you to select the JSON error report downloaded from the common portal. If I select that file, again it will ask you to proceed with the GSTR number will be given automatically. So if I proceed, what will be given, whichever the entries where there are errors which are not accepted in the common portal will be displayed here with a reasoning. If you see the slide number 42, the reason for error occurring has been given. In this case, the GSTR number of the customer or recipient is wrong, because of which it was not accepted in the common portal. From this, we can understand that when we fill in an offline tool any of the GSTR number, it will not get validated. It will get validated only when it is uploaded in common portal of GST. So when I upload, or else if I enter manually any of the GSTR number, the name of the company will be auto populated. If it is not a valid, immediately red color remark will come, the GSTR number is not a valid. So what we require to do when the error report is opened, I may require to do the modification of these 4 entries and again create the JSON file of only these 4 entries and upload it. Or else you can log into your portal and only these 4 entries can be online submitted. So when it is submitted, there is a delay in validation of the data submitted again. So once it is submitted in table number 4, if you click on the table 4, inside the entries will be appearing, but when you come out and the blue color table, the total whatever it will be displayed will not be considering those 4 entries. So for validation also there is a certain time taken by the system, which is a system error, so will not be able to do anything. You may require to see after 4 to 5 hours whether it is validated or not. This is the second method, and this is a very useful method because entire data will be given in Excel sheet and imported, and again JSON will be generated and uploaded in common portal.
Yeah.
Next option. Yeah.
Just to sum up couple of issues which we have noticed so far. First issue which we have seen is in case if the financial period for which your JSON is generated is July and you are trying to upload it for the month of August, system will not validate. So there are some inbuilt functionalities which have been done to validate that the correct data is going on. It so happens that there are situations that you will be working on multiple clients or multiple files, and there might be chances that you pick some file and upload in a different portal. So there are inbuilt functionality. The JSON which is generated has the GSTR ID for which you are filing and the financial period for which you are filing. So only when those two match, the return gets processed. Further, once it is being processed, the recipient GSTR IDs which has been marked in your file, even that needs to be a valid GSTR IDs. In case you do not have a valid GSTR IDs, there are all the chances that those records would be shown as error. So whenever you are obtaining the customer from your customers the GSTR ID, make sure the data entry which is done in your master that has been validated, else at the time of filing the returns you will face this issue of having an error. Now in the event of assuming you are nearing the deadline and you have these records processed with error, the two options that you would be left with is you would have to get the correct GSTR ID from your customer, update it. Now in the event you do not have, you cannot process this record either by putting your own GSTR ID or someone else. So the only alternative that you could left with, you could park it as a B2C and move it as a B2C sales so that you are reporting all your turnovers and the liability. And once you get the correct GSTR ID, in the subsequent months, you can again add this record in the same table of the B2B supplies and amend your B2C sales lower to that extent.
Yes. Okay. Thank you very much, sir. Okay, and next option what is available for is copy paste from the Excel. How can we do this? So we have already discussed the Excel where we are required to give the data and import the files into offline tool. A same Excel we have to go and you have to select any one of the sheet. For example, if you see the Excel sheet, there is a B2B separate table, B2C separate, B2CL separate sheet and B2C small separate sheet, and other things, debit note separate, credit note separate, advance adjustment. So for each and everything one sheet has been given in Excel sheet. So for example, if I take B2B where there is a certain data, I need to select from the heading. So not the data what you have typed, including the heading has to be selected. And when you open the offline tool, where I need to click on the second option, select the table. So I need to select first B2B ka table. Then there will be two options. One is import CVC or copy from Excel. So copy Excel has to be clicked. Then the dialog box will be appearing to paste the data which you have copied from the Excel sheet. That has to be pasted in the dialog box, and once you paste it will take certain time, maybe 2-3 seconds or maybe a 1 minute depending upon the data you have selected. So again after this a warning message will come if there is wherein it will ask do you want to save the data. So once you click on yes, again if there is any error it will be given in a warning dialog box. So this is one more option. Next option is option 4. If you see the slide number 47, when we download the zip file from the common portal, there is a one more folder which will come as a section CSV files. So if you click on that folder, there are certain CSV files given in the folder. So for each table, one CSV file has been created. And if you have only B2B sales, nothing else, then you can go to the CSV file of the B2B and open it, and whatever the data you require to fill, that is shown in the table 49, you require to fill such data, and you have to save the same. Once the CSV file of B2B is saved, then again go back to your offline tool. In offline tool, when you click on the import files, there is again two options. You select the B2B table first and then import CSV file. So, and it will ask for a location. Go to that location and select that file. It will be taken into the offline tool. So once it is done, again I need to cross verify, generate, JSON has to be created and to be uploaded in my common portal. So these are the four methods which are available when you do by using the offline tool of the GST. Okay, apart from this, you can go to the online, and in an online you can manually add and keep on saving each transaction, and this option will be suggested when you are having a very less transactions, because after 10-15 minutes the offline portal can be logged out. It will be automatically gets logged out, and when it gets logged out, your data is not saved, means again you have to redo the same unless and until it is saved. If it is saved, it will be available in your portal. This is the four methods which are there for uploading the GSTR1. So we know how to upload the GSTR1. Now the basic things is learned. But how to fill the GSTR1, that is a major challenge. We have table 1 to 13. So 13 tables are there in GSTR1. So for filling this 13 tables, we require to have certain details or documents or informations. Once this data is ready, filling the tables is very easy. So in what format I need to keep my data ready? So if you see the slide number 53, I have given certain categories. There are many categories. So I need to have the data in this format, and I'll explain each of the category how it is useful for filling my GSTR1. Coming to the first category, taxation based, whether my output supply, which is I have made to the others, whether taxable or not. Why this is very essential for me? If it is taxable, I'll show it in table 4 of GSTR1. If it is non-taxable or exempted or nil rated or non-GST supply, then I have to go to table 8. So even though I have my total outward supplies, again I should have a bifurcation of taxable and non-taxable. Non-taxable will have non-GST, nil rated and exempted. So this is the first category where I should have a breakup of data. Second, customer based, whether my customer is registered or unregistered. Why this is required? Because when I am doing any sales to a customer who is registered, that will be treated as a B2B, that is business to business. So that should come and sit in table 4 of the GSTR1. And when I do any kind of supply to a customer who is not registered, that transaction will be treated as a B2C, that is business to consumer. And this has to be reported in table 5 and table 7. So I need to have this data again with this breakup. And again B2C, why? Again in B2C, I said there are two tables which are applicable, table 5 and 7. Why table 5 and 7 is applicable? In case if it is a B2C transaction made to a interstate customer and where the total invoice value is more than 2,50,000, that has to be shown in table 5 at invoice level and rate level. And when it comes to others, that means B2C interstate, where the invoice value is less than 2.5 lakhs, and all B2C transaction of intrastate, that is within state, that has to be reported in table 7 of the GSTR 1. So again, in B2C I require two separate categories, that is B2C large or B2C small. B2C large is nothing but interstate transaction having more than 2.5 lakh. When it is come to a 2.5 lakhs, how should I compute this 2.5 lakh? I should take the total invoice value. That means your assessable value or a taxable value plus taxes. So including that, if it crosses 2.5, it comes and sits in table 5 of the GSTR 1. So next, level of reporting or level of details which I require to report in my GSTR 1. One is invoice level with a rate wise. Another one is consolidated with a rate wise. For example, if a supplier dealing with the 4 rates and supplied only within Karnataka, even though place of supply is 29, I require to record the transaction in 4 level basis because rates are different. So I need to have both this data. Next is destination based. This is nothing but nature of supply, and nature of supply can be determined based on the IGST Act place of supply provisions. If it is a goods, section 10 and 11 will be applicable. If it is a supply of services, then 12 and 13 will be applicable. So based on that, I need to decide whether my transaction is interstate. If it is an interstate, charge IGST and show it as a IGST, and if it is an intrastate, charge CGST as GST, also disclose the same in your GST return. So I need to have how much I have done within state, how much I have done outside the state. This breakup is also required to be provided. Next is medium of sales. What is this medium of sales? Am I a supplier who is supplying his goods through the help or facilitation provided by the e-commerce portal? So if there is a supply is made through e-commerce portal, then I need to disclose the same separately. As of now, TCS and TDS provisions are not made applicable. However, the registration for TDS and TCS will get started from August 18th of September. So once it started, these provisions will be applicable. So whenever you do any transaction through a e-commerce portal, that has to be recorded along with the e-commerce portal GSTIN number, and e-commerce operator is required to deduct the TCS on the net value paid to the supplier. Next is reverse charge. There will be always a confusion whether reverse charge should come in GSTR 1 or 2. Usually when we tell any reverse charge, what we understand is the liability applicable on me under reverse charge. But here when it comes to the GSTR 1, it is not the liability applicable to the supplier. Instead, it is whether the supplies made by the supplier attracts GST under reverse charge in the hands of a recipient. For example, I am a ABC Limited or ABC company doing a GTA services. So in this situation, if I provide any kind of supply to a person who is registered under GST, then the recipient is liable to pay the taxes. In case if I am providing a service to a person who is an individual and not registered under GST, then being a service provider or supplier of service, I need to pay the GST. Being a supplier, I have two kinds of responsibilities here. In certain transaction, I require to pay the tax as a forward charge, and in certain cases, the recipient is made liable on my supply. So wherever there is a liability on recipient on my outward supply, these transactions also is required to be shown in my GSTR1. However, I need to click the reverse charge column given in offline tool as well as online tool. Once I click on the reverse charge button, that invoice ka liability of GST will not be added to my output tax liability. Instead, it will be made available to the recipient in his GSTR2 table 4A. So I need to have a bifurcation of my transaction where I need to pay on forward charge and where the recipient is made liable to pay the GST. So this is also one of the information which I require. So if I have this information ready with me with the breakup how I require to upload, then filling the GSTR1 will be very easy. Okay.
I just want to add one point here. Now this slide which we have been seeing, the slide 53, is really critical. Whatever be your accounting software, if your accounting software can generate your sales register, so the normal sales register which we know, invoice date, invoice value, column, party name, the tax rate and everything, have your sales register, then if it can mark each item which we are seeing, whether taxable, not taxable, within the state, outside the state, your party is registered, not registered, all the data you have in multiple columns, then it is easy for you to extract the relevant data and file with the relevant tables. Now GSTR1, the statement of outward supply, though it is the sales register, ideally we are not filing all sales register in one go. We are splitting the sales register into multiple tables. Relevant data is picked from your sales register and you are filling in the relevant tables. So it is critical your sales register is capturing all this information. So most accounting systems have been customized to ensure the GSTR1 data is generated automatically. If not, if you ensure this data is available in your sales register, you can use the offline utility and file the entire data. So we will see table by table which data goes into what table.
Yes, that's true. So your accounting software plays a very important role for filing GSTR1 very easily. Okay, slide 53, as Venu sir said, it is very important. If we capture the data in this format, filing of GSTR1 from any of the assesses or any of the CAS or STPs will become very easy. We'll see the table wise table now. So we know what is the data we require. Let us see how it has to be filled in each of the table of the GSTR1. So when it comes to the slide number 54, so GSTR first table, I need to give my GSTIN number and legal name of the supplier. It is not required because once I go and log into my portal, all this data will be auto-populated, and only the one thing what I required to do is aggregate turnover of the previous financial year and April to September quarter ka aggregate turnover, which I clearly explained in the initial. Aggregate turnover is a PAN based, so you have to include the turnover of all your GSTIN numbers in India based on the PAN. So you have to show that in column, row number 3, and this has to be shown only in the first time, and subsequently it will be taken from the portal itself automatically when all the GSTNs file their annual return. So once annual return is filed by then, entirely it will be added and displayed as aggregate turnover for all the GSTIN numbers of the same PAN. So next is slide 55, where we have a table 4 of the GSTR1. So what is the table 4? I have again there is a 4A, 4B and 4C. So what is 4A? Supplies other than made through e-commerce portal or attracting reverse charge in the hands of recipient. So if we see the table only, there is a 4A, 4B, 4C, but when we see the offline tool or the online tool, there is no 4A, 4B, 4C. Why? So all the options have been given in a same format of 4 in offline tool, wherein I may require to select the required columns. For example, it comes under reverse charge and recipient is made liable to pay the tax. I have to click on the reverse charge button given in offline or online tool. So once I do, that will go and sit in 4C and 4B. And if I enter the GSTIN number of the e-commerce operator in offline or online tool, that will go and sit in 4C and rest will come and sit in 4A. So what is the data I am given in 4 is supplies made to all registered persons, whether it may be supply from your side or through e-commerce portal or where the recipient is made liable. Okay, all these transactions will come and sit in table 4 of the GSTR 1.
Yeah, one point to note is the table 4 is only for taxable supplies. There's been many questions coming in saying that I made a sale to a registered person, but it is an exempted supply. Should I do the data entry here? The table 4 data entry is only for taxable supply. So please, if you are making any exempted supply, that's reported elsewhere. Table 4, mind you, it is taxable supply to a registered person. So the rest of the data is captured elsewhere. This is one critical point to consider for when you are filing table 4.
I think this doubt will come because the initial format when it was given, nil rated if it is entered in table 4, no need to record in a table 8. But when we see the taxable supplies definition, anything which is leviable under GST, leviable may include nil rated also.
Yeah.
So again, there may be a clue which can take. If you want to disclose in table 4, I don't think there will be any problem. But it is always better you disclose in table 8 where you will come to know what is your nil rated or exempted non-GST, and applicability of rule 42 of CGST rules will become easier. And that will be taken by Venu sir. I think formula is fantastic and we will enjoy it. Okay. Next, coming back to the slide number 56, what we need to fill in GSTR 4. What is essentially you have to fill properly? Your invoice number, invoice date, taxable value, tax amount and GSTIN number of the recipient. If you fill all these 5 tables properly, columns properly, then this is the data which will be taken for matching under section 42 and 43 of CGST Act. So all this data you have to fill properly, and even the recipient has to fill it properly if it is not filled by the supplier. If it is done properly, then I think there will be no mismatch. And one more thing, if you are a SEZ supplier, if you are registered as a SEZ operator or SEZ developer, so what happens for you? I have made a outward supply. It may be a goods, it may be a service. Coming to the goods part. So SEZ is supplying a goods to a DTA, and as per the SEZ Act and rules, the DTA is required to furnish bill of entry while importing any goods from SEZ. To understand in a simpler manner, SEZ located as outside India. So any goods purchased from SEZ, it is treated as an import of a goods. So in this situation, whether SEZ should record in GSTR 1 or the recipient should record it in GSTR 2. So where the clarification given in the instructions of GSTR 1 is that if the supply is made by the SEZ is against the bill of entry, then such transaction is to be recorded only by the recipient in his GSTR 2 and not by the SEZ supplier. However, if the bill of entry is not generated, then SEZ is required to show the same in GSTR 1. But there is again clarification. If SEZ is supplying a goods as per section 30 of the SEZ Act and rules respective to that, the DTA has to compulsorily give bill of entry. If they are not filing the bill of entry, they are required to give a authorization to the SEZ to generate the bill of entry, and that bill of entry will be in the name of DTA. Hence again this will go on sit in GSTR 2 and not GSTR 1 of the SEZ. But in case if it is a service provided by the SEZ, that will come and sit in GSTR 1. Okay, this is the important factor which we require to remember with respect to the SEZ provisions. And if any of the invoice is not uploaded for the tax period, okay, for the tax period, then you can upload the same thing in subsequent month. There is no restriction for uploading any of the previous period ka invoice in the subsequent period unless and until it is within time. So if we see the section 37, there is a provision given, any kind of error or any kind of omissions done has to be made before September of the subsequent to the financial year 17-18. I have to do all kind of rectification before I file September 18 return. So if you see the slide 57, I have just given one example for the reverse charge mechanism. I am a supplier of GTA wherein few of the transactions the GST has to be paid by the recipient under reverse charge mechanism. If you see the slide 57, wherein there is a 5 invoices and one is marked in a red color, which is a transaction under section 9.3. Section 9 subsection 3 is nothing but reverse charge transactions. So when you see the next slide, that is 58, there are summary of the invoices given. If you add 3 plus 1, 4 invoices have been recorded, not all the 5 invoices which is shown in a previous slide of 57. So even though I have recorded 5, it is taken on record only 4 because only in 4 invoices I am liable to pay the GST as a forward charge. In one invoice the recipient is made liable, hence it will not be counted for my output tax liability. So this will make clear table 4 things proper.
Yeah, one point which I want to add is there are many questions which are coming is I am a service provider like GTA and where the liability is on the recipient. Should I still show it under my outward supplies and with the tax value? If I show it, will it get added as my tax liability? So there was one small apprehension for many users. If I submit it, then I would end up paying the tax. So mind you, as long as you're reporting as the reverse charge applicable on this transaction, liability is not on you. So you can very well report the turnover. Ideally, GSTR 1 is only meant for reporting turnover. So you can consider that reverse charge liability will not be added to you when you're reporting under this table.
And because of this table, recipient will also be very happy if they are registered from a registered person, if they have procured any services from a registered person, because they are also no need to determine the classification and rate of tax, everything. So this will help the recipient merely to remit the tax liability whatever is disclosed by the supplier of the transaction. Next, coming back to the table 5 of the GSTR 1. Table 5 is for those transactions where it is a B2C, business to consumer, but invoice value exceeds 2,50,000. In this situation also I need to show invoice level plus rate wise information in my table 5. Again there is a classification like 5A and 5B. 5A includes all transactions done to an interstate customer not registered under GST and where the value is more than 2,50,000. And 5B covers out of the 5A how many transactions have been made through e-commerce operator. And presently e-commerce operator provisions have been not come up, and even though you have done through a e-commerce operator, you have to show everything under 5A only because their TCS registrations are not yet open and it will be open from 18th of September. Next, in case I have done a sale wherein the invoice value exceeding 2,50,000, but customer is from Karnataka and even the supplier is also from Karnataka, should he record such transaction in table 5? No, such transaction should not be recorded even though value is more than 2.5 lakh, because table 5 is applicable only for interstate transactions. And next is table 6, that is slide number 61. If we see the table 6, which was provided as a exports, supplies under supplies made to a SEZ and SEZ developer and deemed exports. But actually when we see the offline or online, we are only giving table 6 for exports made with payment of IGST or made without payment of IGST. Other two aspects, that is supplies to SEZ and supplies to a deemed exports, is covered under table 4 only. How it is covered? If you see the offline utility, there is a drop down box given for the invoice type, wherein regular, SEZ with payment, SEZ without payment and deemed exports 4 drop down has been given, and I may require to select a regular if I am supplying goods to other than SEZ, and if I am supplying any goods or services to a SEZ, then I may require to select the appropriate one, that is with payment or without payment, whichever the option selected by the supplier. So when it comes to a manual format of table 6, all the 3 is there, but when we go to the online, only 6A is applicable, 6B and 6E. C is linked to table 4 of the GSTR 1. Coming to the slide 62, there are a few confusions which exist with respect to the shipping bill. So where there is a details of shipping bill has to be given in table 6. For example, I have not yet received the shipping bill details before I filed July month ka return by 20th August. So what should I do? Should I report in my GSTR 1 or should I not report in my GSTR 1? We have to report such transaction in GSTR 1, and shipping bill details we require to leave it blank. And once we get the shipping bill details in the month of August, I can go to the table 9 wherein I can amend the details of shipping bill. So I need to amend in table 9 so that it will be given to the department. So next, in case of a export, I don't know the customer, or else customer is not registered under GST, so GSTIN number of the customer is not applicable. In that situation, I may require to keep the column of that blank because there is no GSTIN number of the customer in case of export transactions. Okay, and in case if you are exporting the goods without payment of IGST, then you may require to select the rate as 0. And what is a 0 rated is very essential. Many of the assessees have a confusion that 0 rated and nil rated, whether it is same or why it is called differently, because 0 rated is also 0, nil rated is also a 0. Coming back to the 0 rated, the 0 rated supplies is nothing but exports and supplies made to SEZ and not anything else. So what is the benefit of calling it as a 0 rated? When you do any kind of supplies, that is export or SEZ, I will not be required to reverse the proportionate input tax credit under Rule 42 of the CGST Act. However, if it is a nil rated, Rule 42 will get applicable and I may require to reverse the proportionate ITC applicable to that. So benefit of 0 rated is no need to reverse my input tax credit. I will be eligible to take the full input tax credit and not to pay the IGST. Next is table 7, slide 63. So when we see the table 7, it is a consolidated information I am given in table 7. What is this? Whatever the transactions which are not covered above, that is table 4 to table 6, that will come and sit in my table 7. What those transactions? B2C transactions, where the B2C made to a interstate customer and value is less than 2.5 lakhs, that will come and sit in table 7. And also all the B2C transactions made to a intrastate customers will come and sit in table 7 of the GSTR1. How should I show all this transaction? Again, here I need to have a breakup. How much is intrastate and how much is interstate. In case of intrastate, I need to show the details only rate wise. If I have a two rates, example 12% and 18%, I need to select the 12% and display the total turnover of intrastate supplies made to B2C, and select 18% and show the total turnover of supplies made to B2C intrastate. Again, here total turnover means how I should compute my total turnover for the purpose of table 7. If you go to the table 7, where in the heading itself it gives consolidation or taxable supplies, netting of debit note and credit notes issued for the tax period. That means I need to adjust the debit notes, credit notes raised during the tax period. For example, assume in a July month I have made B2C intrastate supplies of a worth 1 lakh rupees, and I also raised a debit note of a worth of 20,000 and a credit note of a worth of 30,000. How should I compute my consolidated taxable value? 1 lakh is my total invoice value. Add 20,000 which is arising out of the debit notes. So my subtotal is 1,20,000, and I have raised a credit note worth of rupees 30,000. Reduce that and remaining amount will be 90,000. That will be my consolidated taxable value of B2C of 12% or 18% or whatever the percentage. So this is how I need to compute my taxable value with respect to table 7. Coming to the table 7B, what is that? I need to disclose B2C interstate transaction where my invoice value is less than 2.5 lakhs. Here interstate means nothing, not in a single line I need to show. I need to identify what is the place of supply, and accordingly I need to select the place of supply and disclose the total turnover. For example, I have made a supplies to a Tamil Nadu from Karnataka, and which will be treated as an interstate as per place of supply rules, assuming that. So I have raised 3 invoices for the customers who are located in Tamil Nadu, and the total figure comes to 9 lakh. So in that situation, I need to select place of supply as a Tamil Nadu and disclose the total taxable value as a 9 lakh and IGST of that portion. And similarly, I have made a interstate transaction to a customer who has not registered but located in Andhra Pradesh. Again, I am in Karnataka, customer is located in Andhra Pradesh. So treating it as an interstate supply, I need to see how many invoices I have raised to the customers located in the Andhra Pradesh. Assume I have raised only 2 invoices worth 6 lakh. So I need to show such amount in table 7B, wherein I need to select place of supply as a Andhra Pradesh. In Andhra Pradesh also again we may require to see whether it comes to Telangana or Andhra Pradesh, and select appropriate place of supply and show the total taxable value and show the tax amount for the same. So if it comes to a 7A, rate wise I require to see, only the rate wise I require to see, give the information. But when it comes to a 7B, along with a rate wise I have to give place of supply wise as well. So it is not merely my total consolidation of B2C transactions. In that also I need to have a substantially a category wise, whether it is a interstate, intrastate and rate wise. And next, coming to the slide number 65. What is 65? Table 8. Table 8 requires us to give the details of nil rated, exempted and non-GST supplies. Here many of us have a doubt. What is nil rated and exempted? If we see the exempted supply cut definition, it includes nil rated, exempted as well as non-GST supply. So all the three are exempted only, and treatment of Rule 42 will be applicable for all the three. But still, why they require a separate bifurcation of nil rated, exempted and non-GST? In this regard, we can see if there was any schedule of a 0% under GST for a goods where we have a 5 rates. Few of the things will come under 5%, 12%, 18, 28%. So if there was any 0 rated or a nil rated, that should have made to come under nil rated. Or else one more analogy can we take is we can see the notifications of both exemptions provided to the supply of services and supply of goods. And when it go to the supply of services, there clearly a nil has been given against each of the services, which is not done in the same for supply of goods exemptions provided. So if we consider this as a basis, maybe all the services which are exempted may come under nil rated, plus wherever there is a tariff which is mentioned as a nil also come under nil rated with respect to goods, and all other exemptions may come and fall under column 3, that is exempted. So this is one analogy. But if we see in these cases also, which is merely exempted also, I need to have a 4 kind of breakup. Whether it is made to a registered person, whether it is made to a unregistered person. In registered person also, whether it is an intrastate or interstate. Same with respect to unregistered. So even though I require to give a lump sum value in table 8, again I need to have a 4 categories for that, and that amount is required to be shown in table 8 of the GSTR 1. Slide number 66. When it comes to a table 9, which plays a very important role, because many of our assessors we do mistakes, and that has to be rectified through our amendment table, that is table 9. If we see here, the amendments have been categorized as 9A, 9B and 9C. 9A is a mistake on invoice. What is this? Whether actually we have done a mistake in the invoice, that can be rectified in the online? No. On a hard copy of the invoice I have done properly, but while recording the same in an online, I have done a mistake. Such kind of errors can be rectified through table 9A. And previously when I go to the export example, shipping bill details was not available, so I have not given. So again that can be given by way of amendment in table 9. So next is 9B is debit note or credit note. Here the question comes, when I should raise a debit note and when can I raise a credit note? Debit note is also called as a supplementary invoice, or it includes a supplementary invoice as per section 34 of the CGST Act. If we read the section 34, debit note can be raised whenever there is an increase in the taxable value or increase in the tax rate. In that situation, debit note can be issued. Oppositely, whenever there is a decrease in tax liability or decrease in tax rate, I can raise a credit note. But when we see the section 34 properly, there is no time limit prescribed for raising a debit note. But when it comes to a credit note, I have a time limit to raise a credit note. So when is the due date for raising a credit note? This has been given as for financial year. For example, for the financial year 17-18, any of the invoices which I have raised for the outward supply, I can issue credit note for those outward supplies by September of 2018. So when I issue before that, I can do the adjustment. After that, I'll not be allowed to give a credit note. Even though I give a credit note, maybe tax benefit will not be given back to me. That is the disadvantage of mentioning the time limit for raising a credit note. When we go back to the VAT laws, we had a time limit for credit note, but when it comes to a service tax, Rule 6 subsection 3, Rule 6 and sub Rule 3 of service tax rules never given any time limit, but service providers now should take care of a time limit for raising a credit note. Again, for what transactions I can raise a debit note or credit note? If you see the slide 67, in a drop down list, there are a certain reasons for raising a debit note or credit note. Once may be a sales return or post sale discount, or for any other reason. If it is not covered above, I can select other and I can go ahead with filing of the debit note details or credit note details. When I was preparing for this session, I was trying to raise a debit note for a rate change. For example, I have charged 18% for my goods, wherein I laterly realized that it is only 12%. Oh sorry, it's an Ulta case. I have charged 12%, wherein I laterly realized 18% is the rate. So I have to collect the 6% differential tax from my customer. So can I raise a debit note for collecting merely 6% of the tax? So for this, it is very important for us to see the slide 68, wherein I have given a screenshot where it will ask me to give the taxable value under which of the tax rate it has to be given, that is 0%, 3%, 12 or 18 or 28. So when I give a taxable value there, the tax amount will be automatically captured, automatically computed in the software itself. But in my case, there is no taxable value in my debit note, because I am raising debit note only for collecting the differential tax amount. So what should I do? And further, the differential rate is 6%. Assume 6% of 3% of CGST, 6% of CGST and 6% of SGST. What I should do in this case? So I can't record anywhere in the table given by the offline tool. In that situation, I may not be able to record this kind of debit notes in my GST portal. In this situation, what may be the solution which may be available to us? So we may require to raise a credit note for the tax invoice for the entire invoice and reverse the invoice by way of credit note and raise a new invoice. This may be one of the solution. As of now, we may arise, but we may require to see in future if this will get amended. We may require to show the only taxable value and go ahead with that. And next is, whenever you raise any credit note, I need to give the original invoice number in the table 9. So debit note or credit note, original invoice data has to be given in table 9. So initially we were under the assumption that if I raise a credit note giving 5 invoice references can be uploaded in online, but it is not possible. One credit note can be uploaded with against one original invoice. So they'll give you to select select any one invoice in a original invoice column, and you'll not be allowed to select or give a more than one invoice number. So that means I need to raise a credit note or debit note, a single credit note or single debit note against single invoice. So in this situation, the difference will come if it is a quantity discount. So how should we do it? So if it is a quantity discount and linked in agreement and also linked to the outward supplies made by me, so how should I disclose in my return? So 100 invoices I have raised for the last financial year and I get a quantity discount at the end of the March or beginning of the April. So should I give a 100 credit notes for that purpose, and how I can record the same in GST return will be a big challenge which is there for the dealers. Okay. Anything to add in table 9, sir? Okay. So this is an essential thing, and also a tax rate differences. We may not be able to raise a credit note or debit note. Better to cancel and raise a new invoice for it. So directly go into the table 10, slide 71. Okay. If you see the table 10, there is a amendments with respect to the unregistered supplies made to a unregistered dealers or supplies only unregistered dealer, including B2C. B2C, if there is any changes, I can do such changes in my table 10. So for example, initially Venu sir gave an option. For example, you are filing your GSTR1 on 10th of the August, and 2 of the registration numbers of your recipients are wrong. So you are not able to contact your recipient and get the proper GSTR number. So you disclosed it as a B2C transaction. In that situation, in August month, going by the benefit of the table 10, you will reduce your turnover in table 10, which is disclosed in table 9 of the previous tax period, and you are increasing your B2B transactions, wherein even the July month invoice can be recorded in August and it will get accepted. So with this, if there are any issues of a GSTR numbers, can be avoided. Next, table 11, slide 72, very important slide or very important table, because giving data in table 11 is not so easy, where it will ask you to give a consolidated advances received for the tax period. So in case I have received advances from a 10 party, consolidate that amount and show in a table 11. When we see the initial format which was given to us as a GST return with respect to the advance, we were supposed to give party wise, and each line item, once we submit, transaction ID will get generated, and that link should have been given to the invoice when we actually raise. But that burden has been taken out because of the consolidation provided in table 11. So what I need to do here, if I received a 1 lakh advance from a party, first I need to arrive whether it is received from an intrastate party or interstate party. One is that, and also you should see whether your supply will become intrastate or interstate based on the place of supply. When I can do this adjustment, only when I can know from which party I am receiving the advance and against which purchase order I am receiving this advance and against which goods or services this advance is going to be adjusted. So when I know all these elements, then I can raise a receipt voucher for the advance amount received from the party. In a receipt voucher, I need to give the details of the party and also the place of supply, HSN code, and rate of tax for such supply. So once I know all these things, I'll raise a receipt voucher and same will come and sit in table 11. And here one more thing what we need to keep in mind is, whenever I raise a receipt voucher, recipient is not eligible to take the credit based on the receipt voucher, because we have to go back to the section 16 of the input tax, section 16 of the CGST Act, wherein 4 conditions have been given, and two of the condition is he should in a possession of an invoice and recipient should have received the service. In case of an advance receipt voucher, the recipient doesn't have the invoice, doesn't have received the service, so he'll not be eligible to take the ITC on the receipt voucher. So once I disclose the receipt voucher in a table 11A, here again intrastate table 11A1 it will come. If it is an interstate, it will come under table 11A2. Okay, again I have received an advance, but I don't know against which I am going to adjust. In that situation, what should I do? So what the government has made it compulsory in an invoice provisions. If we go to the CGST rules, invoice provisions, a receipt voucher, I think rule 50, where it will give you that in case if you are unable to identify the nature of supply or you are unable to determine the tax of rate applicable, then assume the tax rate as a 18% and nature of transaction as a IGST, that is interstate transaction, and pay the IGST tax on the advance amount received. So here the question comes, I have paid a IGST on such advance amount, but when I actually raise an invoice, I determine that it is a CGST SGST transaction. So this IGST will be adjusted towards my CGST SGST, because when we see our cash ledger, IGST can be adjusted only against IGST, CGST can be adjusted only against CGST, and SGST can be adjusted only against SGST. Cross utilization is not possible. So in this situation, so what happens is the assessee can reduce IGST liability to the extent whatever the IGST paid on the advances. So he'll have any other liability on IGST, he'll get reduced to that extent. And however, on this transaction where it is a intrastate, he has to pay CGST and SGST only, and no cross utilization of cash payment happens. So when this adjustment happens, for example, I have received a 1 lakh advance in the month of July and have raised an invoice in September. So in that situation, in a September, I have to utilize table 11B, wherein I need to reduce whatever the tax I have paid on advances. Whenever I give any information under table 11B, to that extent my output tax liability will be reduced. So this is how it will be given. So why it is reduced? Because of table 11B. Because once I raise any invoice, full invoice value I need to give in table 4, and how much ever I am adjusting against the advance, that information has to be given in table 11B. And where I have given a tax liability of 1 lakh in table 4 and 80,000 set off in table 11B, and only the 20,000 will go on sit in my output tax liability. So this is what the table 11. And coming to the table 12, that is our 75 slide number, wherein I need to give summary of HSN details, HSN wise outward supply, consolidated figures I need to give. For example, I am dealing with the 10 commodities or 10 different HSN. So what is my turnover against each HSN has to be given by the supplier. For example, if my turnover is less than 1.5 crores, HSN is not applicable for me. In this situation, HSN column will not be applicable for you. Instead of that, description column will be mandatory for you. So when you open the table 12, both HSN and description will have a star mark, that is compulsory. So however, if you record the description, that star mark of HSN will go off. So any one you have to give, not both. If you want both also we can give. But HSN digits, how we have to mention? If it is 1.5, my turnover is less than 1.5, I will not give any HSN. If my turnover is 1.5 to 5 crores, then I will give 2 digits ka HSN. And if my turnover is more than 5 crores, I have to give a 4 digits. But in case of export and imports, this condition is not applicable, and we may require to give full 8-digit HSN in case of exports and imports. That is what we need to take care. And last table of our GSTR 1 is table 13. Table 13, we require to give the details of the documentation raised during the tax period from the starting serial number to ending serial number utilized for the tax period. If we see the table 13, there are 12 items. So you may require to have a different series for invoices for an outward supply, different series for purchases from a unregistered dealer, and receipt voucher, payment voucher, and also a refund voucher. We need to understand what is receipt voucher, what is payment voucher, and what is refund voucher. Receipt voucher we have already discussed, where it has to be raised when you receive an advance amount, and payment voucher will be issued when you make any payment to a unregistered person, because this is covered under reverse charge under section 9 subsection 4 of CGST Act. So whenever you are procuring any kind of supplies from an unregistered dealer, you have to pay under reverse charge. But if you pay any advance to them, then you have to raise a payment voucher, and on that also we require to pay the tax. So because of that, payment voucher is also essential. Next is refund voucher. Why refund voucher? I have raised a receipt voucher when I have received advance, but I am not at all raising an invoice because of cancellation of agreement. In that situation, I can go for a refund voucher. And next, I require to give the details of the delivery challans, starting number to ending number, which have been issued during the tax period. That will come and sit in my table 13. Okay.
These are the questions. Okay, we have received many questions, and a couple of questions which are on GSTR2 we are not taking because it's in the coming session. We'll only take GSTR1 related questions.
Okay. One of the question is, okay, whether debit note raised for a quarterly purchase discount from the supplier can be accounted. If so, whether GST to be accounted on the discount. So debit quarterly purchase discount, it cannot be any debit note, because when we are getting any discount, it should be a credit note. And whenever I have mentioned the debit note, credit note during my session, it is always raised by the supplier of the invoice, not from the recipient side. If we see the provisions of the GST, whenever there is a debit note, credit note is referred, it is always from the supplier point of view, not from the recipient point of view. If you are a supplier, you have to raise a credit note, and yes, you can raise a credit note for the discount if it is not interrupting with section 15. We have to see the section 15, that is determination of value provision, and accordingly if it is linked to the supply of goods, definitely we can raise a credit note. This is not taken. If the payment is made under IGST head instead of SGST, what is the remedy? SSC will not make any intrastate supply. If SSI is not at all making any intrastate supply, he has to go for a refund option, and he will not be able to adjust the same for SGST. Next question is, service tax assessees where compulsory registration under GST, that is nothing but migration. If someone has a turnover of 15 lakh, there is no need for registration in GST, but had to compulsorily get registered. The link for surrender or cancellation of registration, which was supposed to be activated by July 31st, is not yet activated. Are such people supposed to levy GST? If they are very sure that they want to cancel or surrender, they are not going to levy the GST. If they don't want to surrender or cancel, yes, once they are registered, they are liable for GST. So what kind of awareness is required while filing return, and what special consideration should we keep in mind while filing return of a jewelry?
In fact, whatever the provisions which we have discussed is applicable to the jewelers.
Yes.
So we'll move on.
Yes. I have filed the HSNY supplies details in GSTR 1. As and when the reports are finalized, after few days the entry was shown as processed. I could not edit or delete a processed entry. Instead, add a new entry. Why do this happens? Could you kindly help? Even though if it is processed, I can edit before submitting.
Before finalizing the report, all the entries which are saved can be edited.
So there is an option with the edit, like a pen kind. If you click on it, it will automatically gives a edit option. Whether FD interest income of an individual, not banking company, forms part of the exemption and aggregate turnover. If we see the exemption notification given for the supply of services, one of thing is interest earned out of deposits. So it is actually exempted, and we may require to show it in our returns. Whether a single invoice can be raised for a total, okay, fine. Whether tax invoice is compulsory for banking institutes. Yes, it is compulsory, but we see the section 31, there may be a separate format will be given to the banks, and accordingly they can go ahead.
In fact, for banking institution, it has been clearly mentioned whatever the form in which they disclose the information to the SSE, that would be considered as a tax invoice. So there was a relaxation given in the tax invoice rules for banking institution.
Okay, one more question is, I have a only exempted supply. Should I show table 12 HSN basis, and what should I mention in CGST SGST column, because it is mandatory. If you show the amount, show 00 as a CGST SGST, it will account. As it is already there 00, you should not go and give a save button. You should once again enter 0, and then it will accept it. In case of a GTA, whether the details of the supplies need to be filed in GSTR 1, and if yes, then what rate should be maintained, that is 0%, 12%. If we enter 5%, then whether liability of a transporter will created or not. Okay, this is what I wanted to explain initially in my session also clearly. When it is liable in the hands of the recipient under reverse charge, you have to record 5%. If you are going under without ITC, select 5% and show the taxable amount. The tax amount will not be added to your output tax liability register. Instead, it will go and sit in a GSTR 2 of the recipient, which will be clearly explained, by Venu sir once again in his session. one of my client has opted to take composition scheme, whereas his turnover is likely to cross the threshold limit. When can he withdraw from the composition scheme? I think.
Yeah, so the composition scheme opt-out is not yet. So once the composition scheme, the opt-out comes out, you file your CM204 with the respective date within which effective your composition out. Till that period, you will be filing your quarterly return, and from that period, you will be filing your GSTR 123.
Okay, and one more thing, when you're crossing 75 lakh, and I think whenever you have almost crossed 74 lakh or next, you may require to opt out. And for next subsequently, when you cross the 75 lakh, you become a normal assessee and you may require to raise a normal invoice. If there is a one invoices where it is like between 74 and 76, you may require to split the invoice to that extent or charge GST on full. As per the GSTR1 debit note credit note format, we have to provide the basic amount tax and tax rate. Yes, it is compulsory, because of which only when I explained there is a rate change, so we may not be required, we may not be able to raise a debit note or credit note, and we may require to cancel the original invoice by way of credit note and again raise a fresh invoice, and this will be the reason for doing so, and it will be allowed. Can we get the soft copy of the document? Okay, fine. And how to rectify the mistakes in GSTR1 with regard to the turnover of the previous year. So as I understand from Venu sir, the aggregate turnover given in the first month of July will continue for a subsequently also. You may go on revise the same thing in August, because there was many of confusions whether it is a PAN based or GSTIN number based. So there will be an error with respect to that. What is the solution to the change which we are making, but due to a log in the site, the changes are not getting updated, wasting a ton of time? This is faced by all the suppliers or maybe all the CS who are helping or assisting the assessees to file their GSTR1, and which we can't do anything. That's the reason we have a 1 month extra time. And what happens to any items remaining unreconciled in GSTR 1 or 1A? That will be taken care in Venu sir session. Okay. We are located in SEZ Chennai. If our supplier enters our GSTI number in GSTR 1 B2B, it shows our company name, but the option which is available. Okay, I understood the question. What is the problem is, even though if you are registered as a SEZ, and if it is properly not updated that you are a SEZ, even though I put your GSTI number, I am unable to select SEZ option. This is already exist. I think you have to go back and see whether you have taken a registration as SEZ unit or SEZ developer or not. In case of a credit note against multiple invoices, example rebate, what invoice reference to be given in C and D N section of original? Okay, which I clearly explained. If you are raising a credit note, you can give only one original invoice reference, not more than that. If you have a more than one reference to original invoice, you may require to raise that many number of credit notes. There is no other option as of now. Is there a mechanism wherein GSTIN verification can be done in bulk? As of now, so no.
The third party utilities which are coming up will have this feature of verification in bulk, but right now you have to verify manually one-on-one GSTIN.
Okay, next question is whether a sales made through e-commerce should be recorded in GSTR1. Yes, you have to record, but as of now they have not obtained the TCS registration. So if you put their GSTI number in an e-commerce operator, it is not accepting. So you have to disclose normal B2B or B2C transaction, not through e-commerce. Is the submission of documents issued compulsory, or can we take not file it? What are the consequences? I didn't understand.
No, so the question is, can I ignore filing table 13? Now the answer is, table 13 is not an optional table, it is a mandatory table. So if you are not furnishing any information in your table 13, which is the documents issued during the tax period, it is not the correct procedure. You would be liable for penal consequences too.
CS service, it not comes under.
So is CS services covered under RCM? The answer is no.
Okay, kindly differentiate reverse and forward charge. A forward charge is nothing but I need to pay GST on my outward supply, and reverse charge is I am made liable to pay the GST on behalf of the supplier. So that is a reverse charge. And how to enter multiple rate sales in GSTR1. So once you go for a one invoice number, there is a one more column will come for a calculation of tax. For example, you have two sub lines with its two sub rates. So 12% how much is the taxable value of that you have to enter, and 18% how much is there that has to be recorded. And this can be done from the offline also. But when you do in an offline, the total invoice value for both two lines should be same. For example, I have a two line items with a two different rates. I need to record the transaction in my Excel sheet twice, and taxable value for both the lines should be same. However, total invoice value should be same, but when it comes to a taxable value, there should be variation according to the rate of tax. If you see the Excel sheet provided by the GSTN offline tool itself, there is a 1003 invoice. If we see that invoice, the transaction you will be able to make out whether the petroleum product or non-GST product or zero rated. As I explained, zero rated is only supplies made to SEZ or supplies made to exports, that is person located outside India. And petroleum product is a non-GST supply, and it should come under table 6 under non-GST supply only. Whether the product of petroleum, crude oil or diesel is a non-GST or zero rated are exempted, because these products covered under GST but levy is future notified. It's a non-GST supply. Without charging IGST and no bond or LUT, supplies made to SEZ, how to report in GSTR1. This is against the procedure given. So you have to follow the procedure and then only you have to issue the invoice. What is that? Have to report high C sales in GSTR1. Any idea on
this? So now here the question is where do you report high C sales in the GSTR1? Now there is also a recent notification which has come in the high C sales, where if there are multiple transactions which are happening, the person who is doing a transaction, the person who is doing the transaction is only responsible for reporting. And in such scenario, what is happening is the ultimate person who is to be reported is importing the transaction, importing of the goods. So it would be covered under GSTR2 and not under GSTR1.
Okay. One of the question is very good question actually. If I have an incorrect GSTR number, we suggested that don't show in B2B and show it in a B2C for the time period, and next month do the reconciliation in table 9 and table 10 of the GSTIN numbers. But what is the question asked is based on I have shown under a B2C, by my customer would have taken a credit in GSTR2. So when you add it in a GSTR2, when it comes back to you, you have an option to accept or reject. If you accept it, again I think it will go and sit in a table 4 and creates a double time liability. You don't do it in the same month, you keep it, don't do accept or reject, but subsequent months when you do the changes, it will automatically rectify the error and it will be accepted in the recipient GSTR2 also. And if you see, there is approximately 2 months time has been given any kind of rectifications of a mismatch, it will be explained in detail in Venu's session. So once we listen to that, it will be rectified. I don't think that there will be any issue on the availment of a credit, unless, but it will come as a mismatch in the first month, that is for sure. And thank you for the session, and
we will take a break of
15 minutes.
15 minutes and we'll assemble back after 15 minutes.
And we'll go ahead with the GSTR 2, 3 and mismatch reports.
Yeah.
Thank you.
Off again. So there were many questions coming in. Where should I show on GSTR1? Again, the answer is GSTR1 is for outward supply. GSTR2 is for the inward supply. So record all your purchases in the GSTR2 and it will determine your input tax credit and your liability automatically. You need not worry on it. So moving on to the procedure, slide number 78. So GSTR2 is most of the information would be auto-populated if you are making registered purchases and your supplier is uploading their GSTR1 on time. So when these two activities happen, the data is auto-populated and available live in the 2A, using which you can reconcile with your books of accounts. Now, my honest suggestion is GSTR2 is not as easy as GSTR1. Now, you might be thinking GSTR1 has more data entry, so that should take more time, and GSTR2 should be a cakewalk. But however, as we see in the subsequent slides, there are a lot of efforts that would come in. Now, the first and foremost challenge which you will be facing in GSTR2 is when you download your JSON file, it is not at all in a readable file. So department would again give you the offline utility like for GSTR1 to process your GSTR2. But the data which is available in your 2A is GSTN wise and the amount. Now, if you go back to your books of accounts, what you find in your books of accounts is either the purchase ledger or the expense ledger, or at max your vendor name. Now, the GSTN ID is somewhere submerged into the masters. But if you have to reconcile these names and the GSTN ID, you need again an intermediary tool. So the tool which department would be releasing very soon. So you need to do a lot of exercise. Even if there is one record which is missing, you have to identify and map it. That is one thing which is going to be very challenging when you are filing your GSTR2. And there are many situations you made a registered purchase, you have not submitted your GSTN ID to the supplier, and that supplier has treated it as B2C, and when you are filing it, you are not available, you are not having that your data in your online. So these kind of challenges are more likely to come when we go live. Now, the options which are available in GSTR2 is, if I have already the records coming in, I can accept them. If there is shown something as a purchase which doesn't belong to me, I can reject it. Mind you, I cannot delete it because I'm not the creator of it. However, it is my purchase return, I can reject it. I feel that that's a purchase, but there is a correction in my invoice number or invoice value, whatever be the transaction, I can modify it. If I'm not finding any record, I also have an option to add it. So in a while we will see all these things, how it is going to happen. Now, slide 79. Every item in your purchases, which is your inward register of inward supply register, you would be classifying them as T1, T2, T3, T4 for availment of your credit. You are making them as eligible or not eligible. Now, apparently, when you see your GSTR2, you will not find these code words called T1, T2, T3. I shall explain you in a while. Now, this is an activity which you have to exercise for each item which is appearing in your GSTR2A to mark that credit as eligible or not eligible. This is your second exercise which you have to do in your GSTR2. And whenever you are downloading your GSTR2, I have given certain steps. Firstly, always clear your cookies whenever you are downloading so that you will always see the latest data. That's point number one. Point number two, though GSTR2A is available real time, maybe on 5th, 6th, 7th of any subsequent month. However, wait till 11th of the month, because there are many suppliers who might be filing the data only on the 10th. On 11th, when you download, there will not be any more corrections in the data. So you take the data on the 11th and start your reconciliation process. Like if you see on your step 4 and step 5, the matching GSTIN wise basis your books of accounts and the data available in the common portal. Now, what will happen if there are any mismatches? And whenever you are having an entry, apart from accept, reject or anything, you can also defer it for future, which means it is pending an action to be taken, you want to defer it for the future. Now, can I download this in an Excel format and do a simple VLOOKUP? The answer is no. So it will be downloaded in a JSON format. You need to have a third-party utility or a department utility where it will be read back and presented it back in a way in which someone can read. Now immediately after this, I started jumped on to input tax credit. Now understanding input tax credit. So though this is not the intention of the session, but if I have to complete GSTR 2 and especially the table 11, this is some portion where you need to have a small idea. So I will not spend much time. We will quickly walk through various provisions of ITC. Now slide 83, I have given on various conditions where the input tax credit can be availed. Now primarily to avail your input tax credit, you should have received goods or services. You should have the physical invoice with you. Now any credit which you are taking is always availed on a provisional basis and becomes eligible only when the supplier files a valid return. Valid return is filing within time and making payment of the taxes. Now, if you are not making the payment to vendor within 180 days, you are not eligible to take such credit. However, GST is all self-governed mechanism. So no one is coming and checking your books every periodically whether the payments have happened or not. You voluntarily take actions on all those reversals, which we will see in a while. If I have any invoice which is missed, I said we can add that. Such addition is permitted up until September return of the subsequent financial year. So for the financial year 2017-18, up until September return, which is due on 20th October 2018, I have the option to add all those missed records. Now, if any record which is not added by then, I cannot add subsequently. Even if I add, I am not eligible to take input tax credit. However, if the annual return is filed before that, the time limit for me to correct a new record is before the annual return. Now, the next slide explains you the input tax credit. Generally, the biggest benefit of GST, if someone has to say, they would say input tax credit. Earlier, we were not getting set off of VAT credits to send VAT credits or vice versa. Now, currently, I am a tax practitioner, auditor. All my services are earlier or only services. If I bought a laptop and I have paid VAT on it, I was never getting the credit. Now, currently, my output liability is GST, my input is GST. Anything I buy it, and I am not in a deal. I am not a dealer of laptop. Even then, I am putting it in for the business use. I get the input tax credit. So, a thumb rule for your purchases, or you can say that input tax credit is generally available. If you have any doubt on the supply, thumb rule is GST is generally applicable. Similarly, on your purchases or inward supplies, the thumb rule is input tax credit is generally available. Now, however, there are various cases where your input tax credit is not available. Now, I am going to give you an example which during the course I may use it for various things. Now, imagine you are a dealer dealing in rice and which is wholly exempted. Now, one condition for you to take input tax credit is you have taken the inputs used in the business. Now, when you are put and used in the business, such inputs to be used for the taxable supplies. Now, if the inputs are used for an exempted supply, you will not get the input tax credit. So, you are not going to get input tax credit if you are using it in your exempted supply. Now, you are a rice dealer. Whatever is the rent you are paying for your go down, it is for your business purpose. So, it is generally available. But you are also paying rent of your personal house where you are staying and booking that expenditure in the office, booking that expenditure in your business account, and you are paying GST on that. Since it is not used in the business, that is not allowed. So what is allowed is only those which are used in the business and used for the taxable person. Now there could be a scenario where you are using the items inputs for a commonly both for exempted and taxable. Same rice dealer, you are also dealing in sugar, say branded sugar, and let's take an example, 5% is your tax rate. So you are paying your go down rent or a shop rent where both items taxable and exempted are stored. Now how do I take input tax credit? Now these credits are generally available. Now partly you have to disallow owing to turnover which is on exempted turnover, that is your rice. Now Apart from this, there is one other provision which we need to know is the 17 subsection 5, which is restricted or blocked credits, where these credits are used in the business. The thumb rule is anything used in the business, the credits are generally available. But here is a situation, Act has specifically blocked the credit. So if you are a dealer in rice and you are constructing your own godown, the credit is not allowed. So if you see your slide 84, the last item, restricted credits, you see your motor vehicles, food and beverages, the beauty treatments, outdoor catering, all this, the various items mentioned in this, the credits are not allowed. However, the credits are allowed for the same taxable outward supply. For example, I am a Maruti car dealer. When I am buying the car from the distributor and selling to the end customer, I get input tax credit. But I am an auditor and I am buying the car for the office purposes, I do not get input tax credit. So these restricted credits have a peculiar phenomena where your taxable outward supply is in the similar nature, you get input tax credit. I am not explaining this in detail. Please read 17 subsection 5. Now, let me link back all this T1, T2, T3. So, those credits which are not attributable to the business, the rent paid to my house, where it is debited to the business expenditure, it is not allowed credit, that is called your T1. Rent paid to the godown, where exclusively used for supply of rice, again used in the exempted supply, it is T2, input tax credit is not available. 17.5 blocked credits, any purchases items mentioned in this, it is T3, your input tax credit is not available. The situations where you have inputs both for taxable and exempted goods, then they are called common credits. So what is eligible input tax credit for you is T4, which is wholly or exclusively used for the taxable outward supply and common credits. All common credits, you are eligible to take the input tax credit fully upfront. Then you will reverse the portion which is attributable to the exempted supply. The mechanism which is explained in the subsequent slides, I will explain it as and when it comes. Moving on to your slide 86. 85 is what I have given the different examples of T1, T2, T3. So moving on to your slide 86, this is also one other important slide for you to understand. Now, whenever your input tax credit, it first takes the shape of whether it is available or not available. So the moment the supplier has filed their returns, it is appearing and it is available in your GSTR 2A. The moment the credit is available, the first thing you have to do is to mark it as whether it is eligible or not eligible. So once you are saying it is eligible means it is T4 or C2. What is not eligible for you is T1, T2, T3. So every item which is appearing in your GSTR 2A, which you are importing into 2, you have to mark them as whether it is eligible or not. Now, those you are marking as ineligible, you are not taking credits further, and no, there is no further processing. Those you are marking as eligible, you will further have to add it whether it is input goods, input services or capital goods. So these eligible credits you have to further bifurcate into 3 categories. After bifurcating into 3 categories, you are moving into the next step, whether you are availing it, not availing it, or adding it back to your liability. Now, I have received the goods, say on 2nd August, supplier has shipped the material on 30th July. Ideally, supplier is reporting it in the July month GSTR 1. Now, though it is appearing as a credit to me in GSTR 2 in July returns, I am not eligible because I have received the material only in the month of August. Those credits, I defer it. So I am not availing. Only those credits which I am availing, which we will see in table 3 and the column 12 onwards, where this credit you are moving from the eligible section, you are moving it into the subsequent columns, how much you are availing. And whatever you are marking as you are availing is what you are reflecting back into your credit ledgers. I have also shown whatever is added to your liability, which we will see little later. Now, whatever the credit which you are adding to your credit ledger, it may remain the shape of whether you are utilizing, which is adjusting to your liability, or parking back it into your credit ledger, that is not utilized yet. So I said I will explain you the methodology of reversing the credits. Now slide 87 explains you how shall you reverse your credits. Now the common credits for R could be for two types. One is these credits are attributable to non-business supplies, or those credits attributable to exempted supplies. Now let's take the easiest thing, credits attributable to the exempted supply. So I have the godown rent paid, and in the godown I am storing my rice and I am storing my sugar. Now to the extent of the rice, I should disallow the input tax credit because it is exempted supply. Now there could be subjectivity if I am going by weight of the items which are getting stored, or the size, etc. So to avoid this confusion, what the Act has clearly defined in the rules, so Rule 42, it has clearly defined that use the turnover of exempted and taxable of the previous month, and all your common credits in proportion of your exempted and taxable turnover, disallow to the exempted turnover. When I am saying disallow, you are adding to your output tax liability. Now there could be situations where some months you do not have exempted turnover, or your exempted turnover is very less, and businesses for some reason they may show only exempted turnover, a smaller figure in 1 month, and reduce the common credits only to a lower portion. So whatever the adjustments which we are doing for the common credit is always again a provisional basis. Act says do the adjustment month on month, and the month in which you do not have the exempted turnover, go to the previous month where the turnover is, use that method and reverse the taxes. However, if you are doing this methodology, you have to again recompute the entire activity once in a year. You recompute all your taxable turnover and exempted turnover once in a year and redo this adjustment. Table 11, we will see how do we do the adjustment. This is called your D1. The other common credit which you need to reverse is the credit used for the personal purpose. Now when I say credit which is used for the personal purpose, like exempted turnover, I cannot use a turnover concept because the credits which are used for the personal purpose are not generating any turnover. So here they have given a rationale, 5% of your common credit blanket to be disallowed whenever there are non-business credits which have been reported. So that is coming on the input goods and input services. Now when it comes to the capital goods, there could be a situation where the capital goods are put to use for using your producing your exempted turnover or taxable turnover. Whenever a capital good is put to use both for taxable and exempted turnover, again the thumb rule is the month in which you are getting the capital good, you are being given a full input tax credit. The month in which you are buying, you are given a full input tax credit. Subsequently, the Act has defined the life of this asset, maybe 4 years, 5 years actually, but the life under the Act is defined as 5 years. So total capital good credit, you divide it by 60, so you are getting a credit which you are eligible on a monthly basis. Ideally, you are supposed to take a credit every month, but they have given a leeway to take the credit upfront. So you are taking the credit upfront, and month on month you are reversing the credit to the extent of your exempted turnover. Even here the formula is exempted turnover divided by total turnover. You will use the same formula and reverse. The only thing which you should note here is when you are reversing, you are not just have to reverse only the principal portion, you should also calculate the interest, because you have enjoyed a credit at the upfront or at the beginning of the purchase which you are not eligible. So at the 60th month, when you are reversing it, you also have to calculate interest for 60 months whatever you have taken, and you have to reverse. So the 89 I have again reiterated. So that is rule 42.2. Whenever the provisional credit which you are reversing on account of D1 and D2, if it is going on a higher side, whatever the credit which you have reversed, and you recalculated once in a year, it should be lower. You can again claim back the input tax credit, or if you have reversed the short credit, you will reverse the higher credit, and you will be also liable to pay interest on it. There are other rules of reversal where you have not paid the taxes paid the amount to the vendor within 180 days. Again, you will reverse the credit, and the time in which you are making the payment, you will claim the credits. So this is a brief note on the input tax credit. So with this, we will be moving on to GSTR 2.
So I'll just add 2 points. One is D2 I need to compute on 5% of the common credit, that is C2.
Right.
And also when you see the eligible credit is T4 plus C2 proportionate to your turnover, and turnover of the tax period has to be taken.
Correct.
If I'm doing the computation for July month ka exempted and taxable I need to take. If I don't have any one of the element, one is exempted or taxable, I need to go to the previous tax period where both is available, exempted as taxable, and that I need to take. And again, if I do at year end, even though you do it on 1st of April, you need to pay 1 day ka interest for whatever the excess availment has been taken. So this is the one of the consequence, because it is not linked to the service tax, wherein 3 months of the period was given to do this activity. Later on interest was computed, but when it comes to the GST, from the day 1 of the April, interest is computed.
Right. So slide 91. Now, like GSTR 1, even GSTR 2 has 13 tables. Right. So, slide 91. Now, like GSTR 1, even GSTR 2 has 13 tables. So, table 1 and 2 is auto-populated, basically the return for which you are filing the financial period, and the GSTN ID and the name. Now, the 92 is showing you the look and feel of if you are doing the data entry online. If you are doing the data entry online, how does this tables look? So both slide 92 and 94 gives you the look and feel of the online version. So on 93, I have given you an explanation how to do it. So you will be downloading the offline utility. Right now the utility is not up. Maybe it may up as and when I am completing the session also, we never know. So like GSTR 1, you will be downloading the offline utility which will facilitate you to process GSTR 2. Now, mind you, if the number of invoices are beyond 500, you will not be able to process GSTR 2 online. You have to process it offline only. So this is one limitation. So slide 95 gives you a glimpse of what is there in your GSTR 2. Now ideally GSTR 2 is here for your purchases. So we have covered 1 and 2. So now let's look at slide table 3 to table 13. If you notice, table 3 to table 7 captures all your purchases. 3 to 7 captures all your purchases. So I am now segregating your purchases inward supply into taxable and others. Now, whatever you are making a taxable purchases from a registered person, be it a forward charge where such person is collecting tax from you and paying you, or be it a reverse charge where he is only making a supply, you are liable to pay the taxes, which is 9.3, not 9.4. So, like a GTA service or an advocate or any of those goods which have been notified. So, when you are making such purchases, even that you are making from a registered supplier, so you will have to report that. Now, all table 3 talks about forward taxable purchases. Table 4 talks about reverse charge taxable purchases and unregistered purchases. Now, unregistered purchases could be again two things. Now, I am not including imports. Imports I will deal with subsequently. So, unregistered purchases within India or importation of services is also under reverse charge. So, your table 4A is where if you are making a taxable purchases from a registered person where you have to pay under reverse charge, that is under table 4A. If you are making a domestic taxable purchases from an unregistered person, you are reporting it under table 4B. If you are importing any of your services, you will be reporting under 4C. Next comes import of goods, whether it could be a direct imports or from SEZ. Direct imports are reported under 5A, imports from SEZ are reported under 5B. Leaving this, all other purchases where there is no tax implication, no tax applicable. One is your composition purchases. Though it is a registered person, you are not getting any input tax credit, nor he is charging any tax on the invoice. Next, all exempted supplies, exempted inward supply, nil rated non-GST supplies, all these supplies are reported under your table 7. I've just missed table 6, which I'll explain you in a while. Now, these registered purchases, whatever you are reported under 3, 4, 5 taxable purchases, if that needs any correction, that corrections are done in your table 7. Now, with this, you have completed your input tax credit and relevant purchases. However, there are some credits which may be on the cash basis or a credit which are not reported elsewhere is captured. So table 8 talks about your credits which are receiving from ISD. Table 9 talks about the credits which are getting from TDS and TCS, which is government or e-commerce operator. Though I am calling it as a credit, it is not your input tax credit, it is your balance of your cash ledger. Then moving on to table 10. Like your advances, similar under GSTR 1 where you are paying taxes when you receive advances. Under CGST Act, I began with a statement saying that your tax payout is only at the time of purchases. But there could be a situation where you have not made the purchase yet. You made an advance payment to an unregistered dealer. Had it been a registered dealer, he would have paid tax on it and reported to the government. Given that you are making a payment to an unregistered dealer who is not reporting to the government, you would be now paying taxes on all the payments which you are making to an unregistered dealer. Now mind you, whenever you are making payment of taxes to your unregistered dealer, you are not going to get input tax credit because you have not fulfilled the basic condition of purchase of the goods. So when you purchase the good, you would report it under your the table 4, you get the input tax credit in the same month. Now, whenever you are making the payment under table 10 for the advance payments, you would also reverse that payments as and when you book your expenditure under your table 4, you will reverse it and your liability will also reduce. Table 11 has all the adjustments of your input tax credit, upward movement, downward movement, which we have seen in a while. So table 13 is similar to your table 12 of GSTR 1 where you are giving the summary of various purchases. You are giving the summary of all the purchases under table 13. Slide 97 gives you a glimpse of after filling and filing your GSTR 2 when you download it, how does it look like? So it would be downloaded as a PDF document for your references, which will be all the summary of whatever the data which you have filed. So this is more like a replica of whatever the form which you are seeing under notifications. So let's now dwell upon detailed table by table. So slide 98, table 3. Now table 3, as I said in the beginning, this is on the registered purchases. This is inward supplies from a registered purchases other than reverse charge. So this is only a forward charge purchases where you have already paid taxes to a person and such person is remitting to the government. So all those purchases are reported under table 3. Let's look at what needs to be reported. In case if such a person has not reported, you have the onus of filling this information line by line. It begins with the GSTN of the supplier. So it is mandatory you have the GSTN of the supplier from whom you are buying and the invoice details, which is invoice number, date and value. Whatever is the rate. So even here you would be filling it rate wise. If there are multiple rates, so under 5%, what is the taxable value? 12%, what is taxable value? Item wise you are reporting what is the taxable value and the amount of tax. The amount of tax could be I or C plus or anything. And the place of supply would be auto populated. If the place of supply is other than LOR, there is a change, but otherwise place of supply is auto populated. So up to column 11 is pretty simple. So let's focus on understanding column 12 onwards. Now for every item which is auto populated, which is there up to column 11, you have a specific action to be taken for each purchase. mind you have a specific action to be taken under each purchase, where you have to mark it firstly whether it is eligible or ineligible. So you will be given a drop down. If it is ineligible, you will be marking it as ineligible. If it is eligible, you have to mark it as input goods IP or input services IS or capital goods CG. So you have to choose whether this purchase belongs to any of that category. Now after choosing it, amount of ITC available. You can also have an option where you would want to defer the input tax credit for the subsequent period. You have not received the materials, or for some condition you want to defer it, or you want to avail partly. Whatever be the situation, you can write how much of the amount of ITC that is going to be available. So whatever the amount of ITC which you are writing here as available will get credited to your electronic credit ledger. Those items which is parked, which is not completely used, this line items would be again populated for the subsequent use in the subsequent periods. Now the actions that you have for the table 3 is you can accept it, reject it, modify it. Clear? In the slide 100, I have shown you the department view. So when you log into the department under B2B summary, you will be having two options: uploaded by the supplier, uploaded by the taxpayer. Uploaded by the supplier means it is auto-populated, it is available. You have the options which are available to you in the right side button. You can see reject, accept, or keep it pending. Okay, this has been uploaded, so you can and there itself you can select the record and modify it. So you are not finding a delete option because you are not the creator of it. So any invoice whomsoever is creating, they will only be deleting it. Now whenever a receiver uploads a new invoice or modifies his own, so the flag is not required because I am entering the record. So I have given the next slide where if the invoice details are missing, you are adding it. So this would be coming under the next section called uploaded by the taxpayer. So in the uploaded by the taxpayer, when you click on that section, you will get the option to add missing details. When you give the option of add missing details, you will be seeing the same information what we have seen under table 3 with all the details. And you will also have an option to select whether it is attracting a reverse charge. So even a 9(3) purchases missing is also can be automatically uploaded. Now down you see the item wise tables where you have multiple rate of multiple items which is purchased at a multiple rates. Each rate wise you will be entering. Now the only thing, the difference between a GSTR 1 add invoice versus GSTR 2 add invoice. GSTR 2 add invoice cannot be done whenever you want. The time there is a filing window for the GSTR 2. Add invoice can be done only during the filing window. You cannot do before the filing window because the invoice may not be available at this point, but once when the GSTR 1 is filed, that would be available. Moving on to table 4, which is inward supplies on which tax is to be paid on reverse charge. So in 3 situations tax is paid on reverse charge. Registered persons 9(3) purchase, which is on GTA or all those specified goods. The second, all unregistered purchases, which is defined under 9(4). The third is importation of service. In these 3 scenarios where you will have to pay the taxes under reverse charge. So table 4A, 4B and 4C talks about it. Now in terms of reporting, even here it is exactly same like your table 3 where you will be giving all the supplier wise details. So you have to report this invoice wise, date wise. Each invoice value has to be reported. Again, each invoice value, the tax to be captured. You will again have to select whether the credit is available, credit is not available. Then you will move on after column 12, how much, whether you want to evaluate the current month, defer it, all those options are available. Moving on to slide 105. This is the option which is available on the online portal. If you are adding it manually in the online portal, you will see the same thing. The supplier name, the invoice number, invoice details, everything. So there is a small change for the look and feel for the online portal and the forms. for the 4A, which is 9(3) purchases, is in the online. It is entered similar along with your table 3, and you have an option to tick whether it is a reverse charge. So in this table, you will only be entering your 4B and 4C purchases. So there is one issue which generally many members do ask is we have this 8/2017 notification where you have this 5,000 exemption limit. Now, if I am availing 5,000 exemption limit, how do I report it? Now, if you read that notification carefully, if you are falling under that notification where the purchases which are made during the day is less than 5,000, the taxable purchases are less than 5,000, then they are treated as good as an exempted purchases. So those URDs which are falling under 8/2017, you will not be reporting under table 4, you will be directly reporting under your table 7, your exempted supplies. Moving on to your table 5, this is on about import of goods. So this has again a nexus with your bill of entry. So you have a 13-digit value which is port number and the bill of entry to be updated. Even this is a manual data entry. Once you do a data entry, in IGST whatever you are reporting here is matched with the ICAI portal. So let's look at the data to be entered. The Gst of the supplier. Now Gst of the supplier is optional if it is a direct import, but if it is an import from an SEZ, you will be giving the SEZ GSTN ID. Details of the bill of entry number, date and value. Then rest is for same rate and the taxable value, how much tax is being paid, whether it is eligible, not eligible, and how much amount of ITC is available. In terms of the subsequent portion of the input tax credit reporting and the adjustment is common across all the tables. The one question which members generally ask here is, I am importing the goods from abroad. The invoice value is 1 lakh, but for the purpose of customs, there has been assessed as 1,50,000. How do I report here? Now, if you see the reporting here, you have this specific question of what is your bill of entry value and what is your taxable value. So you will be reporting your taxable value, that is assessable value, as 1.5 lakhs. Accordingly, you will be selecting the tax rate and taxes gets calculated accordingly.
Includes BC also.
Yeah. So this includes your customs duty also, but however, what credit you get is only integrated tax IGST, which is being paid. Moving on to slide 110, which is table 6. Now, as said in the beginning, you do not have an option to revise your returns. So by mistake, if there is a data entry and error is human, so if there is a data entry, you do not have an option to go back and correct any of the returns filed earlier. So once a return is filed, lifetime the return is the same. So to ensure these mistakes are corrected, every table has an option to correct it. So the table 6 is an option for amendments of all the inward supplies which are reported under table 3, 4, 5. 3 was about taxable purchases, 4 were all RCM to be paid, 5 was import of goods from direct imports or SEZ. All these things I can make amendments. Along with the amendments, credit note, debit notes are also reported under the same table. Now, even if a credit note, debit note, I made a mistake in the past, the same mistake can be corrected back under the same table, which is 6D. So table 6 has 3 subtables. So 6A, where the supplies other than import of goods received from SEZ, so you will be making corrections. 6B is where the supplies by way of goods received from SEZ, you will be making corrections. 6C, you are reporting your debit notes and credit notes. 6D, you are making corrections to whatever the earlier reported credit note and debit notes. Now mind you, this is only an amendment, meaning you have filed something wrong, you are correcting what has been filed wrongly. Moving on to 112, slide 112, table 7. So table 7 records all other purchases. So what are the purchases which we now not completed is all your non-taxable purchases, or where your input tax credit is not available. Those purchases is what being reported. So it could be composition supplies, composition inward purchases, nil rated purchases, exempted purchases, or non-GST supplies. So all these purchases you would be reporting under table 7. It is to be reported consolidated base. You don't have the option to report tax because there is no tax implication. So what to report is only the purchase value. In all earlier tables, the value of the purchase and the tax. This table is only the value of the purchase. Here the only expectation of the reporting is how much of these purchases are made within the state, how much of the purchases have made outside the state. So interstate supplies how much, intrastate supplies how much is what is reported under table 7. Moving on to credits. So we have recorded all the credits that are available on account of purchases. However, there are various other credits that would come in. The first credit that would be coming is on the ISD credit. So where ISD has received various services and they would be filing their GSTR 6 and general due date is 13th. So it is always in between 10th and 15th, so that ISD gets the input services, finalizes their return and passes on the credits to all the other GSTs. Now these credits are auto populated. So whatever the credits which have come from way of ISD, they are all auto populated. It could be ISD invoice or it could be ISD credit note. Both are auto populated. So with the document wise, how much is the credit received is what auto populated. So you will be now moving on to amount of eligible input tax credit. Now it is expected when an ISD is transferring the credits, they would be transferring eligible credits as eligible, ineligible credits as ineligible, because as a recipient branch you would not know whether a credit is T1, T2, T3 or any of those. You would be not knowing as a recipient branch. So the ownership is on the ISD to mark those credits as eligible, ineligible and transfer it to the recipient branches. Table 9 is the TDS and TCS credits. Now currently both the TDS and TCS provisions are deferred. So whenever you are dealing with a government transactions and the transaction value is 2.5 lakhs and above, so government will withhold a taxes of 2% of the transaction and they file their GSTR 7 and that TDS certificate is available in 7A. Those credits are auto populated under this table. Now again, if your government operator is not filing the returns, you also have an option to do a manual data entry under this table where you will take the credits and again it goes for the matching and mismatching. 9B talks about TCS credits, which is e-commerce operator. So wherever a transaction is passing through an e-commerce operator, even e-commerce operator collects a 2% tax of the net supplies happened during the month. Such amount when they file their GSTR 8 is also again auto reflected in the table 9 of GSTR 2. Table 10 is what we discussed. Wherever you are making payments to an unregistered supplier, wherever you are making a payments to an unregistered supplier and the purchase is not recorded. So mind you, you have made a payment and the purchase is not recorded under table 4. Those purchases, those payments are to be reported under table 10 and you shall discharge the tax. So here when you are discharging the tax, you have two subtables A and B. Whenever you are recording the invoice, you will be reversing under B. Whenever you are making the payment, you will be taking under A. Now again under A, you have two subtables 1 and 2, which is all your intrastate payments you are reporting under 1. All interstate payments you are reporting under 2. Even here, the expectation of reporting is you select the rate, how much is 5%, 10%, whatever is the rate, how much is the advance you have paid and the place of supply to be selected. You will be selecting how much is your CGST, SGST, IGST tax liability on it and you shall discharge the tax. Mind you, whatever the taxes which are reported under this table is not available for you as an input tax credit, you shall reverse it back and you should reduce your tax liability so that you get the input tax credit only when you book the purchases. Moving on to table 11. This is one critical table where you will be manually adding your liability for various reasons, or you are reducing your liability. Now, why am I using the word liability when it is coming towards input tax credit or your GSTR 2? So the example which I have given earlier, these common credits, the common credits are taken as eligible credit upfront, meaning those credits are taken upfront, taken a credit to your credit ledger, you are enjoying the credit fully. Having utilized the credit fully, whatever the credit you are not eligible which you have to reverse, that reversals are added to the liability. The months in which where the credit is not available, you need not bother about reduction of the credit. These reversals are added to your liability. So if you see, there are 6 different items which are added. So what is reported here under the form is only the rule numbers. So in the subsequent slide 117, I have explained you those rules. First rule was if you are not making any payment within 180 days. So you have already availed the credit and you have not made the payment. Again, that much amount you are adding back to your output tax liability, OTL, output tax liability. Next, ISD, whatever the apportionment which has been happened, you are adding it. So what is critical for you to understand is rule 42 and 43. 42 is on about the D1 and D2 reversals, which we have looked at the mechanism in the earlier slide. You are adding it. 43 is on the capital goods used both for the taxable and exempt. Now, I said these adjustments you are doing month on month on a provisional basis, because the month in which the values were not available, you are taking the previous month, or it could be some months higher, some months lower. Again, you will have to do the same exercise. Rule 42 2A, which says you have to carry the same exercise after the financial period, considering total value of the exempted supply and taxable supply during the financial period, and recompute what is your D1 and D2 liability to be added. At that time, when you are recomputing whatever is the liability that needs to be added, you will be manually making again that adjustment. In case you have made an excess reversal earlier, you will be reducing your output tax liability. If you have short reversed earlier, you will be adding to your output tax liability. Moving on to your table 12. Now table 12, you need not worry on it. One portion again, it is auto populated. It is about those credits which have been taken on a provisional basis and owing to your mismatch. It could be duplicate credits. In a while I'll explain the mismatch. Owing to mismatch, if the credits are to be reversed, these reversals are handled by the system automatically. So if there are any negative input tax credits of the previous tax period or various reasons why the credit needs to be adjusted, so it sometimes where the provisional credit is re-available, the credit needs to come back. All those adjustments are done by the system automatically. So table 12 will reflect that. Moving on to the important table, table 13. Now table 13 is the HSN wise summary of all your inward supplies. HSN wise summary of your inward supplies is again applicable same like your GSTR 1, where the turnover is more than 1.5 crore, only then you have to report HSN wise. Now there is a common question which generally again comes from the members is, my turnover is less than 1.5 crores. Can I choose to ignore this table? Again, the answer is no. What is optional for you is only HSN. So you will skip the HSN and you shall fill the rest of the information, that is description. And you will be writing whatever is the description, whatever the description you are maintaining under natural books of accounts you will be maintaining. You will be reporting that description. What is the unit quantity, whatever the items which you are reporting. In fact, quantity has been hard coded. So you have there are a lot of various measures of the quantity has been defined by the system. Kgs, numbers, meters, everything has been defined. You have to choose a quantity. You have to write whatever is the value of the purchase which has been made, the taxable value of it. In case of exempted supplies and all nil rated, you will have an invoice value, but you will not have any taxable value, and how much tax has been paid. If you notice, your GSTR2 table 13 shall match with all the items which you are reporting under table 3, table 4, table 5 and table 7, which are sum total of purchases which you are making during the month. So sum total of all those items is what you are reporting. So this is what you have to ensure, a periodical reconciliation which you shall make it. So with this we come to end on understanding of GSTR2, where you will be reporting all your inward supplies. I will be giving a quick review of the GSTR2. GSTR2 is only for inward supplies. It is only for your inward supplies. You will be recording taxable, non-taxable, purchase from registered, purchase from unregistered. You will be recording all these purchases. Next, all your input tax credits on your URD purchases is automatically credited to your credit ledger, automatically added to your liability ledger. You need not worry it. As and when you report your RCM purchases under GSTR2, both actions happen simultaneously. Credit to your credit ledger, addition to your liability ledger also get recorded simultaneously. This is one common question generally members ask. Reporting under table 13 is mandatory. So with this we conclude GSTR2. Do we take the questions now or will
GSTR 1 ka questions are there actually, shall we take?
Okay, then we'll complete GSTR 3.
Yes.
Okay, we will move on to GSTR 3 before stepping on to the questions. So GSTR 3 thankfully has a less job for you to do because it is mostly auto-populated. I'm again using the word mostly because again some element of manual work which needs to be done. 1 has 13 tables, 2 has 13 tables, 3 has 2 more tables extra, so totally 15 tables. So GSTR 3 is divided into 2 parts, part A, part B. Part A captures your liability, credit and the net liability that is due. Part A captures your liability, your credits and the net liability which is due. All these are auto-populated. Part B talks about your tax payable and your adjustments. So if you slide number 121, I have given you table wise reporting. Table 1 and 2 is as usual your the auto-populated data. Table 3 is your turnover details. Your turnover from your GSTR 1 is presented back in a little different way. So if you see your GSTR 3, you may not be able to do a straight comparison of your outward liability or your turnover because the auto-populated data is in a different way. I think I will move table wise table and we will see the details. So moving on to slide 123, GSTR 3 can be filed only after filing your GSTR 1 and 2, point number 1. In fact, under the Act, GSTR 1 and 2 are statements, GSTR 3 is your return. So that is why they say there is only one return to be filed. Yeah, that's the only return which is GSTR 3 to be filed. Upon filing your GSTR 3, your liability registers, cash registers and credit ledgers is automatically updated. And 3, if you have not completely discharged your liability and filing the return, it will not be treated as a valid return. And any refund which is lying from your cash ledger can be claimed under GSTR 3. There was questions earlier where by mistake I have paid IGST instead of paying SGST. What do I do now? The only option is you make a claim of that by way of your GSTR 3. In fact, whenever you are making payment of taxes to GST, please consider that you have 20 more bank accounts. 20 more bank accounts. When I am saying 20, tax account, penalty account, interest account, others, the fees account for CGST, IGST, UTGST, SGST. So it's a matrix of 4 by 5. So you are remitting the cash to each of these bank accounts. So whenever you want the cash while filing your Gst R3, you can also make a claim and you can select whatever your bank account, the money would be transferred back to your bank account. Moving on to slide 124. So it gives you gist of your Gst R3. Basic information is auto-populated. Table 3 talks about your turnover. Table 4 talks about your outward supplies and the tax liability of it. Table 5 talks about inward supplies and the tax liability of it. Look at here, in table 5, you are reporting your inward supplies and reporting your tax liability. So I said, when in GSTR 2, table 4, when you are filing your table 4 unregistered purchases or where RCM purchases you are filing, you are taking your credit to credit ledger automatically and the liability automatically. So it is auto-populated here and the liability is recorded automatically. And these tables also have these adjustments. So whenever you are making an amendments using any amendment table, table 9 and table 10 in your GSTR 1 or table 6 in GSTR 2, whenever you are making such amendments, even those amendments, impact of those amendments is auto-calculated. Let me give you an example. So in earlier, while dealing with GSTR 1, we have seen an example where I have made a sale to a customer who is a registered person. I made a sale to a customer who is a registered person, and while filing I realized the GSTN ID is wrong. Now come 10th, I have to finalize the return. I had no choice, so I have to pull out those two records, added it under my B2C. Subsequent month, or when the person, when he has added in their GSTR 2, it is reflecting in my 1A, it is coming in my 1 of the subsequent automatically, where I have an option to accept it or reject it and keep it pending. Now when I'm adding it in the subsequent month, what is happening? My liability is going up and naturally coming into my table 4 of GSTR 3 because I've added it in my regular GST outward supply. However, since I have excess reported my B2C sales in the earlier period, I will also make amendments to B2C supplies in the current month, which means I will lower my B2C supplies. Hypothetically, there are no B2C supplies in the current month. So what is happening? My B2C turnover is actually coming negative and my liability is also coming negative. And this table 4 will take cognizance of all those amendments which are being made and recalculate what is my tax liability. So my tax liability is automatically calculated along with the amendments that I am making it. Moving on to slide 125. We have seen so far on the liability side. Now we will be seeing on the input side. While we file our GSTR 2, we have taken the input tax credit, be taxable purchases, be unregistered purchases, import of services, import of goods, all those purchases made during the month. Mind you, made during a month, because there has been a confusion for many whether RCM purchases credit is available in the same month or not. The answer is yes. You get the credit in the same month. So all those credits are auto-populated under your table 6 input tax credit. So you had your gross liability so far and you have your input tax credit reflected under your table 6. Now, after this table 6, again refer back table 11 of GSTR 2. We made various adjustments. Adjustments like D1, D2 or common capital credits or the 180 days non-payment. Various reasons we made those adjustments. So my liability minus input tax credit. Now this adjustments which you are doing, which is your table 7. So table 7 has all these adjustments. Once you do these adjustments, you are recalculating what your net liability, which is gross liability, outward sales plus RCM purchase. Table 4 and 5. You have taken input tax credit of all purchases, taxable purchases from registered person, taxable purchases from unregistered person, all the ISD credits. You have taken the credits under your table 6. You made your adjustments under table 7 and With this, you will calculate what is your net liability at this point, which is liability minus credits. From here, you will be adjusting your cash credits, which is your TDS and TCS. So your table 9 talks about your TDS and TCS credits. Again, this is auto-populated, whatever which is reported by way of GSTR2. Reported by way of GSTR2. So you have also added some records. If something is missing, you have added those records manually. So by way of GSTR2, whatever you have submitted there, that data is auto-populated under table 9. Now, thankfully, system will do an auto calculation of whatever is your liability due and interest penalty dues. So generally, most of the times, whenever you see a screen online in the portal, you will see the grid box. So there are 3 kinds of data entry screens. So whenever you see a box with a white color, it's a data entry. A box with a shaded color, you cannot do any data entry. But a box with a shaded color with a 0 in it, which means it is an auto-populated, and generally you will find it for both for your interest and penalty. So your table 10 talks about your interest liability. Table 11 talks about all the late fee. So we have arrived at net liability or total tax liability under table 8. We adjusting TDS and TCS credit and the interest liability. So you are now coming to what is your tax payable, which is your gross tax and your late fee and other things. With this, we will be completing part A of GSTR 3 and moving to part B. Generally, I said part B is auto-populated and semi-manual calculation. So most of you have experienced the offset liability when you have filed GSTR 3B. That is the activity which you will be doing under table 12, where you will be offsetting your liability, and wherever you have excess cash balance, you will be making an application for excess cash balance. All those adjustments you will be doing under part B. I will explain these tables one by one. You will get a glimpse of it, and you will find a way in which you will reconcile with books of accounts. Now, one suggestion which I have to everyone here at this juncture is, apart from maintaining your regular accounting entries, which is as and when you make a sale, you create your output tax liability. As and when you make a purchase, you will record your inward input CGST, IGST. You should also find a way to reconcile your books of accounts with the registers maintained by the GSTN. The registers maintained by the GSTN is your electronic liability register, electronic cash register, electronic credit register. Now, whenever you are filing your GSTR 1, which means you are crystallizing your output liability, which is equivalent to table 4 of your GSTR 3. So move all the balances basis your GSTR 1 from your output ledgers to your liability ledger. And as and when you are finalizing your GSTR 2, record your reverse charge liabilities and your taxable credits and move from your input CGST to your electronic credit ledger. So what is happening by way of this is, you are trying to offset with your books. 2 things would happen. One, whatever you are filing the registers, they are the one which is there in the GSTN. So you are matching with the GSTN portal. The second activity you are also doing is, when you are moving from output register ledgers or input ledgers, ideally those months, those ledgers should be having a 0 balance, because you are nullifying it. In case if there is any balance left out, it is an indication that there is a data entry error. It could be on account of your own data entry, or a third party return has filed a new item which you have accepted and not recorded in the books. So it would be easy for you to match whether there are any data entry errors. So let's understand table 3 of GSTR 3. Now, table 3 talks about this summary of your turnover. So this has no connection with the table wise linking of your GSTR 1. However, This is a different view or a different picture of your business. How are you reporting under GSTR 1? You are reporting taxable supplies to registered person under table 3. Then you are reporting under table 4. Then you are reporting B2C large under table 5. So each table had a different reporting. However, when it comes to GSTR 3, it first consolidated all your taxable supplies, outward supplies, other than exports or other than zero rated supplies, and is reported as one turnover. So it could be B2C large, B2C small, everything. Taxable outward supply other than zero rated supply is your first reporting. Second reporting is zero rated supply with the payment of taxes. So wherever you are discharging duties and making a zero rated supply, that is reported. And those zero rated supplies without payment of taxes is reported in the next line. Then deemed exports. Then comes all your exempted nil rated non-GST supplies. So all your reporting of your GSTR 1 is consolidated and presented back in a different reporting form for your understanding of the business. Moving on to next table. So this is only turnover. Moving on to your table 4, which is your calculation of your liability of your turnover. Now even table 4 is reported in a different format. So 4 has 3 subtables. So 4.1 talks about interstate supplies. So your turnover in table 3 is in one format. So mind you, again I am saying you cannot do a direct correlation with table to table of your GSTR 1. This is the same data is summarized and presented in different form. Table 4.1 is assessing how much is your IGST liability, because when you have to offset your credits, you have to have the liability, credits and payments against each act. So 4.1 talks about your IGST liability, which is having 4 different subtables. Firstly, all your taxable supplies other than reverse charge, because reverse charge the recipient is paying, so you will not be reporting your liability. Next, this was a question which someone has asked whether the reverse charge is added to my liability. The answer is it will not get added to the liability. Then you will be all IGST supplies, which is your zero rated supply with the payment of taxes. So when you are making a zero rated supply without payment of taxes, you are not going to report it here because there is no tax liability that gets added. And of the above turnover, if you any of that through e-commerce operator, you will be reporting it separately e-commerce operator wise, because this would be again matched with the table return 8 filed by the e-commerce operator. Then comes your table 4.2. Now 4.1 was dealing about interstate outward supply. 4.2 will deal with intrastate outward supply. So all your CGST and SGST and UTGST liability is reported back here, each item by item. Moving on to table 4.3. Now I said again, the earlier tables based on your original turnover which you have reported. Like whenever there are amendments made into any of those tables, be it a B2B or a B2C, impact of that amendments, it could be an increase in the tax liability or decrease in the tax liability. All those amendments are presented under table 4.3. This is again an auto-populated table. Moving on to table 5, slide 131. Table 5 has again 2 subtables. So where you will be reporting your inward supplies on which tax is payable on reverse charge basis. Whatever you are reporting under GSTR 2 table 4, where you are taking input tax credit, that data is auto populated and reported here under table 5A. So your liability is again added. The reporting here, it will show how much inward supplies on reverse charge is applicable within the state and purchases made from outside the state, rate wise tax. That is your 5A. Now again there could be all possibilities. These tables would have been amended subsequently. Whenever there are amendments to this table, those amendments impact is captured under table 5b. So we have now captured all the liability. Let's move on to credits. These credits are captured back from your GSTR2. Now if you see GSTR2, when we are capturing the credits, how are we capturing the credits? Refer column 12 of table 3 or any of those tables where we were marking a credit as eligible or ineligible. And wherever we are saying eligible, there is no explicit say of eligible, but we are saying as inputs, input services. When I mean inputs, it is input goods, input services, capital goods. So in each table of your GSTR2, where you are recording your purchases and credits, you are marking your credits as inputs, input goods, input services and capital goods. So table 6 will summate all those purchases in a different format. Again you cannot correlate your table 6 of GSTR2 directly with table by table. It is a sum total of all your purchases under input goods, input services and capital goods. What is reported here is amount of tax, which is taxable value, and amount of input tax credit. And there you remember how much of the tax is you are availing in the current month, which is the last section of the table in the GSTR2. That amount is reflected back here as amount of input tax credit. So there could be a scenario where there is 100 rupees tax, but I am taking a credit of only 80 during the month. What comes in the last column of table 6 is that 80 rupees amount of ITC. Again, there is only one table here, so all the purchases which have happened during the month. So if there are any amendments to the earlier periods, that is reported under the sub table of 6, which is 6.2. Wherever there are amendments which are happening, that is reported automatically here. Again bifurcated as input goods, input services and capital goods. Moving on to the next table, slide 134, where the additions or reductions in the output tax which is happening on account of various mismatches. Now even this is auto populated from your GSTR2 table 11 and table 12, where it is auto populated if you are making a duplicate claim of invoices, or if there are any reversals on various reasons. Whatever is the data which is reported under table 11 and 12 is submitted and put it back under your table 7. With this, system will calculate what is the outward tax liability at this point of time. Whatever is the amount of tax on outward supplies, inward supplies, the credit reversals, and so it is summating whatever is the liability arising at this point of time is reported in your table 8. After that, table 9, we have seen the TDS and TCS credits, which is auto populated. So there is no amount of value here. It is only taxes, IGST, CGST and SGST. Then comes your table 10. Table 10 is your interest liability. Now if you see the interest liability, there are various columns or various reasons why the interest is added. Let me explain this table little slowly. Yeah. So one is output tax liability added on account of mismatch. So I have taken a credit, supplier has not filed the record, I have added it manually, supplier has not accepted it, subsequent month also not accepted it, he did not take an audit, he rejected it, and the credit is reversed. When the credit is reversed, it will also add the interest because I have enjoyed a working capital credit of 2 months, so the interest gets added on it. Now, so there are various reasons on which the ITC reversals are happening. Now there could be a situation where this credit is carried forward and it is adjusted, or I have not paid the taxes, I filed my Gst R3 without payment of taxes, again system will calculate the interest. For most of you, you would have noticed while you are filing your GSTR 3B, the interest would have been auto calculated because you did not do offset liability. One question generally members do ask here is, what is the point at which the interest accrues, or what is the amount on which interest is generally payable? So I want you to all carefully listen. Imagine a situation in your bank account. You have bank accounts, a OD account and a current account. OD account has a liability of 10 lakhs. Current account has a balance of 7 lakhs. Now, can you go back and ask the banker not to charge interest on full 10 lakhs, saying that you have 7 lakhs in the current account? Answer is no. Banker would not accept. Banker would say that I would be charging on 10 lakhs and not 3 lakhs. Now, what would be your option if you have to get the interest charged on 3 lakhs? You should move the balance from your current account to your liability account. This is the process of your offset liability. So till you offset your liability, though there is a money in your electronic credit register or electronic cash register, your liability is not offset. Your interest is always calculated on the gross liability which is appearing in your liability register. This is one point everyone has to understand. The second point which you have to understand on why cash payment is not cross allowed like your credit register. I said in a while back, the cash is like your 20 different bank accounts which is maintained by GSTN portal. Like this continuing the same example of this OD where you had this 10 lakhs and the current account 7 lakhs. Now I have this current account in State Bank of India and this OD is in Punjab and Sindh Bank. Now for me to reduce that liability, I cannot instruct the banker to adjust the balance, because had it been both the OD and current account in Punjab and Sindh, I could have instructed it. But the balance, the current account is in my State Bank of India. All that I have to do is physically draw the money, meaning I have to issue a check and move the money and put it back into the Punjab and Sindh Bank OD account. So you cannot do a direct offset of IGST cash with SGST liability. Please get that. IGST cash cannot be adjusted with SGST liability. This is again one mistake which generally people do and they do ask. Moving on to table 11, which is on account of late fee. Now on account of late fee, again when it comes to your interest and late fee calculation, you need not worry how much you have to pay. System will automatically show how much you have to pay. So what is the liability? Every form which is not filed within time, 100 rupees per day per form. So you have CGST Act, so 100 rupees, SGST Act, 100 rupees. So you have separate column for CGST and SGST. So 200 rupees, system will automatically calculate and will show it appropriately. And this is a liability of that act. So again, it gets added to the liability of that act, then you have to adjust it. Moving on to your table 12, which is slide number 139. Now, as I said earlier, we will complete our part A, which is auto-populated, and we will come to part B, which is where you have to do manual adjustment. This table 12 is similar to offset liability which you have done in 3B. And there were many instances which have come to my notice and where people have asked that, okay, we have made a wrong payment, how do we do it? And the wrong payment was actually not intentional, unintentionally assuming that the credits can be also adjusted seamlessly. Now, whenever the accountant was making a payment of say 100 rupees tax, so they by default they thought 50 rupees towards CGST, 50 rupees towards SGST, and they have remitted the taxes accordingly. Here is where a little tricky thing till the department comes up with a solution and do it. So all that you have to do, if you remember back sometime back at table 8, we computed how much is the net liability before the tax cash payout. All the credits were adjusted. 2 points you have to note at this point. Point number 1, there is a concept called MAT, minimum alternate tax, like income tax. Even here, first minimum alternate tax is whether or not you have a tax liability to be paid in cash. Whatever your unregistered purchases, RCM purchase liabilities which you have, such RCM has to be discharged in cash. So you have a minimum cash outflow every month, minimum cash outflow every month to the extent of your RCM. So that is point number 1 to be noted, and this has to be paid in cash, and CGST liability under CGST cash, SGST liability under SGST cash. This is point number 1. Point number 2, to determine the balance liability to be paid, the way you have to do it is come to table 12 and column 2, tax payable is automatically shown, right? Ignore column 3 for a moment, focus on column 4, 5, 6. Take all your IGST credits, take all your IGST credit, offset with our IGST liability. In case if there is any excess, move that to your CGST. Then take the CGST credits, offset with your CGST liability. In case if there is anything excess, you can't move it to your SGST, park it there. Similar, do the excess of SGST. What will then happen is your IGST credit has flown to your CGST credit, CGST liability. Your net CGST liability would generally be lower than your SGST liability. There is a general notion that whatever is my liability during the month is generally 50-50, 50 CGST and 50 SGST. So this is one notion, and accountants end up making the payment of taxes wrongly and come back asking, is there a solution? The answer is there is no solution. You have to again pay the taxes, make a claim of refund of the excess paid, excess cash paid by way of your table 13 and 14, where you will be reporting how much you want to make excess cash. So table 14, you will do the entry of that. You will draw the excess cash, but you cannot make the adjustment under table 12. So I'm sure so far you are with me and you understood table 12, because this is one critical table where you have to instruct your accountants, or it is worth looking at the payment whenever the taxes are paid. You can ask anyone to reproduce the table 12 of GST R3. Ask them to show the table 12 computation, arrive at net balances, and then prepare the challan. And you can prepare as many challans as possible, no issues. Even if you prepare a challan wrongly, don't worry what will happen to that, nothing, it will die naturally. You create a challan, it has a 15 days validity, and make the payment of the taxes.
Sir, I'll just table 12, I'll explain with the GSTR 3B once.
Yeah. Okay, let's look at table 12, because most of us are familiar with GSTR 3B. Let's look at again table 12 with GSTR 3B once again. Like this is a critical table, so we are staying on this.
So if we are able to see the 139 slide, so whatever I explained initially in the my session, if you are shown a short liability and which has to be paid in GSTR 1, 2, 3. So what happens is, if you see the column 2 of the table 12, tax payable will be auto-populated based on the GSTR 1 filed by you as well as GSTR 2 filed by you. And tax paid in cash and paid through ITC, that is column number 3 to 7, will get auto-populated from your GSTR 3B. So when you compare the column 2 and 3 to 7, if there is any difference, then that you have to pay with interest. And if there is any excess payment in a cash, then it will lie in cash ledger, or excess payment through ITC, that will be carry forwarded in electronic credit ledger. So you have to always see the column 2 from GSTR 1 to 3 to 7 from 3B. You will come to know whatever the changes you have made in GSTR 1 2. That's all.
Right.
Yes.
So moving on to your table 13. It is on account of whatever is the interest and late fee which is payable. So even this is auto-populated. Here you have no choice. System will show how much is the amount of late fee and the interest, and it calculate, and this would be automatically debited. It would show is amount paid it will show as if it is amount paid. It will take the balance from your cash ledger. So table 13 is again your auto-populated.
One thing add upon here, late fee will get auto-populated, but interest we need to manually compute and show it in table 13. Correct, no?
It gets auto-populated.
Interest, no.
Okay.
Okay, we'll see
Maybe
once.
we have to wait how the APIs function.
Okay.
The expected behavior of that. All right. So table 14 is where I said the money which is lying in your any of those bank accounts. So I said you have 20 different bank accounts. If you see this is a matrix. See column 2 to 6, tax, interest, penalty, fees and others, IGST, CGST, SGST and cess. Whenever you are making a payment of taxes, whenever you have a challan is generated, you will be actually filling the data into these buckets. So each bucket is like a bank account. Like others, CGST is one bank account, fees, IGST is one bank account. So there you have 20 different cash ledgers. Literally, you have 20 different cash ledgers. Now, wherever the balance lying in this cash ledger and you foresee that will not be used in the near future, you foresee that it will not be used in the near future, you can make an entry under table 14. You will make an entry under table 14. Basis this entry, you will also give the bank account details. If you have multiple bank accounts, you will select which bank account the money needs to be transferred, where the automatically government would do an RTGS, it would be transferred back. As I said, whatever the monies you are seeing under this, so IGST tax can be used only for IGST tax liability. If you have any interest or penalty liability, you cannot pay it by way of IGST tax balance. You have to pay, interest has to be paid under IGST interest balance only. So your interest and penalty has to be paid by cash, not by credit, and such payments has to be happening by respective accounts. So this is one area again most of the accountants generally do mistake, because whenever they are making payment, they pay under taxes. Under old laws, when service tax was paid, no one had that specific interest. Whenever they are remitting, they don't bifurcate between SBC, KKC, all those things, and the challans were generated in full and adjusted accordingly. But under GST, you cannot use money paid to one account to a different account. That is all about your table 14, how much money you would want to draw from your bank account. Moving on to your table 15, which is a auto reporting of your the summary of whatever has been paid through cash, paid through credit ledger, and how much interest and late fee paid. So this is your summation of what is your net cash outlay happened during the period by way of cash, credit, and how much of it towards your interest and penalty. So table 15 is your net cash outflow. Maybe incremental other way of saying is your value added tax which has gone to the government is reported under table 15. With this, we conclude Gst R3 and will briefly touch upon, I see there are a lot of questions which have come. So we will briefly touch upon mismatch of credits. So section 42 and section 43 talks about mismatch of credits. Both sections are same in terms of the wordings of the sections or everything. For you to understand, one is like for a supplier side mismatch, one is at a recipient side mismatch. What does that mean? As a supplier, I have some mismatches which are arising because someone has shown it in their GSTR 2, I have not considered, or from the recipient side, someone has accounted under their GSTR 2 and supplier has still not acted on it, and those mismatches are coming. And these mismatches eventually may add to the liability. It may add to the liability. Both the cases it will add to the liability, but one is on the credit side reversal getting added to the liability, or as a supplier I have accepted of someone's mismatch in the subsequent month, again it gets added as a liability, but bottom line is a mismatch. Let's understand what is a mismatch. Mismatch is I reported X, someone is reporting it as X plus Y. Someone is reporting it as X plus Y. Now it could be X minus Y, or it could be 0, anything. It could be any variable. How can this happen? I am a supplier. I made a sale to a registered customer, and while filing the return, I have wrongly entered the Gst of some other supplier. I have wrongly entered Gst of some other customer. So I sold to X, but when I am reporting, I have sold it as Y's GST ID. What happened? It is now sitting as a credit in the ledger of Y. Now X is a genuine purchaser. X is now filing his return. He saw that my sale is not reported. He is adding a record. So what happened? Mismatch generally happens at M+1. Upon filing your Gst R3, where the return is filed, the mismatch report is generated. So how does the mismatch generates? Is it will take the GSTIN wise, invoice number wise, the value of the invoice and the tax amount. If these do not match, it populates as a mismatch. In my example, there are 3 mismatches which are happening. The first mismatch, I made a sale to X but reported as Y. Y in his purchase return rejects that record. Y in his rejects that record. Now X is adding a record. So Y, since he has rejected the record, credit is he has not availed. He will not get any mismatch in his return because he has no mismatch in his return. However, it will show up in the supplier mismatches stating that this has been rejected, which I can go back and correct in the subsequent months. Let's take a simple case for us to understand how does the mismatch arises and how do we tackle with this. Month of July, I made a sale of 1 lakh rupees to X. While doing a data entry, a dot missed, it became 1 crore. My sales are showing 1 crore. The person is showing, the recipient is also showing a credit of the purchase as 1 crore. Now recipient has 2 choices. Either he accepts it or rejects it or modifies it. Now once the recipient is accepting it, there is no mismatch. I am reporting X. X is the same person, he has accepted. Just still no mismatch. Tax amount I have reported as 1 crore. He has accepted as 1 crore. No mismatch. Tax amount, taxable value, everything is matched. There is no mismatch. Invoice number I reported as 1. He also accepted as 1. No mismatch. Now if any of these 3 fields do not match, which is this 1 crore, he is correcting it back as 99 lakhs and reducing it and making it as 1 lakh. He is making it as 1 lakh. It will come in my 1A. Hypothetically, I ignored it. I did not have time. I did not look at it. And I filed my sales return. They filed their purchase return. So what is happening? Justin and Justin is matching. No issue. Invoice number is matching. No issue. However, taxable value is a 1 crore here and taxable value is 1 lakh there. There is a mismatch. So if any of this combination, invoice number, GSTN ID and the taxable value, wherever there is a mismatch happening in these 3 fields, the mismatch arises. And most likely you can expect the mismatches which will happen in the month of July and August would be: you made a purchase from a taxable person, you made a purchase from a taxable registered dealer, and at the time of purchase you did not furnish your GSTN ID. For that person, he would have reported as B2C in a different table. You had a valid invoice with you. You are seeing the GSTN ID of that supplier. You know how much is the tax amount paid. You are now doing the data entry in your table 3 of GSTR 2 and taking input tax credit. So there is a mismatch which is arising. Now what shall the supplier has to do? Either he accepts this or he rejects it. If the supplier is rejecting it, your credit will move to the mismatch. The subsequent month, it will move to the mismatch and it will wait for the supplier to adjust. If you read the provisions of the Act, you have this 2 months concept. Let me explain this, how this 2 months concept work. Month of July, I made a purchase. Month of July, I made a purchase from a registered dealer. I have not furnished the gist in. Dealer has treated as B2C. I have reported in my August month, in the month of August while filing, in a natural course I'm saying, in the month of August, I have added in my table 3. This is showing as a mismatch on 21st to the supplier stating someone has shown a sale, you have not shown it. And it will also come to me, you have taken a credit, someone has not offered it as liability. Now this has to be acted when subsequent month, that is in the month of September. So August returns filed in the month of September. Now system will wait whether in the month of September this supplier is adding it back in his register as the sales. So assuming he is not adding in the month of September also as the sales. So it was sitting as a provisional credit and I have also taken the credit. System will then wait and check, am I reversing suo moto myself in my GST R3 in the month of September? I may not do it. Completed September 20th returns filed. So July transaction, August over, September over, 2 months completed. 21st of the September when the mismatch report is generated, it becomes a provisional credit, carry forward to the subsequent month, will be reversed. And where does it reverse? Under table 12 of GST R2, which I said that is an auto-populated table, where these credits I should have reversed, which I have not reversed, after 2 months gets auto reverse, and these reversals happen along with the interest. The normal interest rate is 18%, but wherever there are a duplicate credits or credits which I know I'm supposed to reverse or not reverse, gets reversed at 24%. So in this case there are 2 interests which gets applied, 18% for the first month and 24% for the second month, and it gets auto calculated and reversed in the subsequent month. So this is on about reverse mismatch and reversal, which is on section 42 and section 43. So with this we come to conclusion of our slide. So I know it is still a mono dialogue. There have been most of the times I might have been fast. So luckily this recording is available. This PPT is available. So you can watch it and take the PPT. You can review it. Wherever you have doubts, you can come back to us. And thank you so much for your patience listening. We will address the questions. So thank you everybody.
Okay. Yeah. Again, there are few of the questions of GSTR1. I'll just address it. Then I'll give it to you for GSTR2.
Sure.
So one of the doubt is I've already filed the GSTR1 and my turnover is more than 2.5 crores, but I'm not given a HSN number. So can I rectify it or any solution? Table 13, there is no amendment table, so I can't rectify. Whatever you have done is closed as of now. And supply of services to SEZ unit under LUT without payment of GST, wait to show in GSTR1 table 4 or 6. As I said, if we see the PDF format of the formats, it under table 6, but when you go to the offline or online, it is table 4 of the GSTR1.
Yeah, so one thing which even when I was showing you GSTR2, the taxable purchases, the taxable reverse RCM purchases is also clubbed and shown. So when the software is designed for the ease of accounting at one place, it is parked there. But however, after you file it and generate the report, so it will automatically show into respective tables. So for the purpose of understanding, you read the form. For the purpose of the data entry, however the utility guides, you should do the data entry.
Okay, next question is, in case of exports without payment of tax, why should the IGST rate be put as 0? Because there is no other tax rate which is applicable. That's the reason we'll be putting a 0, we'll select, and we are not paying IGST. If you are paying a IGST, then we could have selected the appropriate rate for it. As we are not paying, we require to select it as a 0, or else it will ask for a mandatory field. Okay. Again, there are a lot of questions on what is the difference between 0 rated and nil rated. Nil rated, whatever you heard from Venu sir with respect to rule 42 will get attracted if you are doing any nil rated supplies. But the same will not apply if it is a 0 rated. That is the only difference which is there. 0 rated is you are supplying without payment of duty and there is no reversal under rule 42. But when it is a nil rated, you are supplying without payment of taxes, but you have to apply rule 42 of the CGST.
Yeah, I just want
rules.
to add because this being a common question, many people are asking. Firstly, what is zero rated? Zero rated means they're all taxable products. There is a tax rate to it. Owing to certain transaction, this tax rate has become zero, which is because you are exporting, the 18%, 5%, 12% has now become zero. There is no tax on it. That is why these are called zero rated. Now, nil rated is the tax per rate itself is 0%. Tax rate itself is 0%. Exempted is going to section 11 of the Act, where the council has a power to exempt certain goods from levy. So they are not levied for time being. So when they are not levied, there is no tax rate to it. At this point, it is exempted. They are called exempted. Non-GST is they are under GST, but for time being, that the taxability has been deferred to a future period, like your petroleum products and liquor, alcohol for human consumption. They are called your non-GST.
Okay, next question is whether the Schedule 3 item should come in GST return. Schedule 3 items is not a goods, not a supply of service. So it should not come in your GST return. Okay, in case of GSTR 1, so one of the doubt is he has raised an invoice wherein he has having a taxable as well as nil rated in the same invoice. Here I want to clarify you, once it is exempted, nil rated is also considered as an exempted supply. You have to raise a bill of supply separately for it, and you cannot include in the tax invoice. So tax invoice is only for those supplies where tax is attracted. If tax is not attracted by way of nil rated or exemption provided, that should go to the bill of supply. So he has to raise bill of supply. If a particular HSN have more than one rate, can it be accounted twice in a table 12? No. In a particular HSN, if you have a two rates also, you have to club it and show it as a consolidated figure and a one single entry. And even if there is a separate UQCs, that is unique quantity code for same HSN, the system error is there. One HSN can be recorded once in table 12, not more than once.
Yeah, so other way for you to understand is when you are doing a table 12 reporting, you are doing a consolidated reporting. Now you will find it, you do not have this rate drop down. You will report total taxable value, total tax. Now you have same HSN, you have multiple tax rate, you club that whatever is your taxable value and tax on it and report it under table 12.
Okay, if any amount is paid wrongly, maybe under SS, maybe under interest code or any other code, if it is paid in cash, you have to go for a cash refund, and there is no other option available unless and until you have a future liability under the same code. And SAC wise details to be given in table 1. Yes, SAC. Usually we used to call for a service accounting code. Now even the nomenclature of service accounting code has been changed to HSN, which starts from chapter 19. And even this has to be shown in table 12 of the GSTR 1. How to show the SEZ sales with payment of IGST in GSTR 1. And if SEZ unit does not want ITC credit, then what to do? I think the question is right, but the understanding of the concept is a bit different. In case if you are doing a supply to SEZ, it is a zero rated, and if you want to pay IGST, it is your option that you are paying IGST by utilizing the accumulated input tax credit in your books of accounts. And when you pay the IGST on such transactions, being a supplier, you require to go for a refund under section 54, and SEZ will not be taking any kind of credit, because for SEZ it is a zero rated inward supply. So supplier has to go for a refund when IGST has paid on supplies made to SEZ. Okay, here one of the question is the water filter cost. Water filter comes under one HSN, and the parts of the water filter also comes under the same HSN. So do I require to disclose 8 digit to show it correctly. So as of you, if you see the notification or maybe the GST instructions down, they've given you an option to show 2-digit or a 4 digits. You can go ahead with, and if you want to really show the 8-digit also, the system will allow you to show the 8-digit. You can show it and you can go ahead. Whether the exempted supply need to be shown in HSN code wise, yes, even though if it is a exempted supply, HSN number has to be given. Consolidated taxable value has to be given, and taxes will be 00. And turnover pan wise in all registration or state wise turnover. What I answered in my first session is with respect to the aggregate turnover. If the question is with respect to the aggregate turnover, the turnover should be pan based, including all the state
across India.
Yes. And next is whether delivery challan for a job work, when the goods are sent for a job work to outside, the delivery challan has to be given in table 13. Yes, the delivery challans used for job work also, starting number to ending number has to get reported in table 13 of GSTR 1. Is it necessary that the aggregate turnover of 16, 17 and quarter 1 are to be provided every month in GSTR 1? No. As clearly explained, the aggregate turnover will be computed in the system from the next time onwards only for the previous financial year and previous quarter. As they don't have the aggregate turnover with them, we require to give it only in the month of July. If there is any mistake in the month of July, that can be rectified subsequently and no need to give once again. Does salaries form part of exempted supply? As I clearly explained, salaries will go on form part of a schedule 3. So hence it will not be disclosed anywhere in GST returns. While filing GST 1, our invoice double the same. I think the invoice tax amount has become double and they are paid extra. So in this situation, the invoice can be rectified when you file the August 2007 return. Accordingly, there will be, if any tax reduction will be given subsequently to the assessee. Okay, here one more question is, the registration is effective from 1st July or registration GST 6 has been given as on 1st August, but capital goods have been purchased in the month of July. Here we need to understand one condition, that you have to apply a registration from the date you are liable to register within 30 days. If you have fulfilled this condition, then you can take the credit. If you are not fulfilled this condition, then before effective date of registration, whatever may be the purchases made by you, you will not be eligible to take the credit. Whether the details of receipt and payment voucher to be provided, yes, it has to be provided in GSTR 1. GSTR 1, we have to show the serial number, and payment voucher, actual payment voucher will be disclosed in GSTR 2 as explained by Venu sir. If any amount is paid wrongly under cess, you have to go for refund if there is no future liability on the cess. And one more question is, what would be the, can I revise the turnover, aggregate turnover? Yes, it can be revised next month onwards. So there is lot of questions on nil rated and exempted.
Which we have again explained.
Yes, we have already explained.
Okay, there is one question which generally are being asked: what is nil rated versus exempted supply? Exempted includes nil rated, but if you see the reporting under exempted, it will also ask other than reported under nil. So there is one general confusion which is going on: what is nil rated, what is exempted? Nil rated, again, let me tell you where the tax rate has been defined as 0%. So if you download your 1/2017 notification where the various tax rates have been given the schedules, if any of that schedule had a tax rate as 0%, that would have been deemed as nil rated. Now nothing has been defined, so you do not have a nil rated goods. Now 2/2017, whatever the notification which you download, they have been all treated as section 11 exempted. So everything right now what you have is exempted goods, not a nil rated goods. So while filing your GSTR 1 or 2, you can leave it as blank in the nil. You can move it into exempted supply and you can do the data entry there.
Okay, next question is, HSN wise table is mandatory. Yes, it is mandatory for all. What is the penalty for late filing of 1, 2, 3? As sir explained, GSTR 1, 2, 3 for each 100 rupees of CGST, 100 rupees of SGST. That means 200 for GSTR 1, 200 for GSTR 2 and 200 for GSTR 3. So that is the penalty which will be applicable. And one more thing, when you have filed the GSTR 1, if you have not filed within the 10th of a subsequent month, and 11th to 15th you will not be allowed to file your GSTR 1. So that means you will be filing only on 16th of the subsequent month. There will be a 6 days penalty for GSTR 1. Okay, next is sir, here there is one IGST cutout. Taxability. I have a property in Haryana, but registration in Delhi.
Okay.
So can I use IGST?
Generally, this is out of syllabus question, but however, let's.
Yeah.
Okay, we have a property on in Haryana on rent, but I have registration on Delhi. Can I issue the invoice of IGST, or I have to take a registration in Haryana? Again, it is a very subjective question. So if you read the provisions of the taxability 22, 23, 24, where it says the taxable supply from that state. Now, to understand whether should you take a registration under Haryana, you should also answer the question whether there is a taxable supply happening from that state. Which means do you have a sufficient degree of manpower, and do you have a fixed establishment where the people is deployed and there are activities which are happening? If your answer is no, still my opinion, you can raise an IGST invoice from Delhi, because to register in Haryana you need to have a place for registration. Given that is given on a rented premises, even your tenant will not accept you to put your name board on the same thing. So this is a case to case. You have to see whether there is any other taxable supply happening from Haryana which will lead you to take a registration in that state.
Okay. Next question is whether a GTA files its GSTR 1 selecting RCM as in his B2B. Yes, if it is a B2B, he has to select. And once wherever the RCM is selected as S, that will become exempted supply for GTA. Next is composition related thing. If he wants to opt out from the composition dealer, then he has to reverse the credit whatever he then he may require to select the option of coming out of the composition scheme, and then whatever the stock which is there lying on in the stock, then that credit also he can take when he comes out of the composition. B2B sales through e-commerce operator is to be shown in table 1 because B2C small, it is written as other than. Yes, if it is B2C sales cannot be shown in a taxable.
Okay, so the question here is B2C small through e-commerce operator, should it be shown under the B2C large? The answer is no. If you see the B2C small table, you have the option of reporting of the total sale, how much of the sale is through e-commerce operator. It should be reported under B2C small only. Okay,
next is nil rated supplies should fill HSN codes in GST. Yes, even though it is a nil rated, exempted or taxable, all the things should come under HSN code, that is table 12. Validation of HSN summary. Point number 12, we have same HSN with a different, if it is a different quantity UQCs, there is a no option given to you record the same HSN twice. So you have to see one quantity, you have to select and show it in your table 12, and you can intimate the same thing to the department by way of a speed post, acknowledgement due. Okay, again there is one more question on availment of credit on capital goods. Here again the question is the registration effective from a future date and capital goods are purchased in the previous months. So again I have to go back and see, have you applied your registration within 30 days from the date you are liable to register. If you have applied within 30 days, yes, even for the last period, last month or any month you have purchased anything, you can take the credit, or else you will not be allowed to take the credit. So there is one more, any error in GSTR 1 can be rectified subsequently, but revised return cannot be filed. So one more question what here is, the JSON file uploaded is shown as an error. So can they delete whatever the data which is saved from the JSON file, and can they re-upload new JSON file? Yes, but when you after uploading in online, you have to select each invoice wise and delete it. Deletion becomes a problem.
Yeah, if you have a bulk items to be deleted, then you need to use a third party utilities where through an API you can have a bulk action of delete.
Okay, any kind of credit note raised during the month, if it is a B2C, it will get set off in table 7. If it is a B2B, then only it will come under table 9. So that is answered. Okay, supplies made by supplies made by SEZ to DTA, yes, it will come under GSTR 2 if bill of entry has been furnished. If the bill of entry is not furnished, then SEZ will show in GSTR 1. Okay, so this is your question. Anyways, we engage transporter for transporting goods to different location, for which we have to pay GST under RCM. Where to disclose in GSTR 1? It will not at all come in GSTR 1 because it will go and sit in
it's a purchase.
GSTR 2.
Any inward supply will not come under GSTR 1, whether it is an RCM or anything. Only outward supply under GSTR 1, inward supply under GSTR 2.
Okay, any mistake in the month of July return which you have already submitted can be done while you filing GSTR 1 of the August. And next is with a builder question. What is the question is they have received an advance of 10 lakh against a sale of flat. So where it has to be shown? First of the one of the question whether it is a sale after completion. If it is after completion, non-GST goes out. And if it is before completion, then again he has to see the valuation wherein 1/3 may go out as a land cost and only 2/3 may required to be recorded in the table 11 and pay the tax accordingly. And if it is a merely sale of flat, it may go and sit as a exempted supply only for the purpose of Rule 42, for which you can refer section 17 subsection 3 of the CGST Act. What is the penal consequences if table 13 of GSTR 1 not filled? Presently, there is no penal provision only for one table, but general penalty will be definitely applicable for the procedures not followed. RCM has to be shown under GSTR 2. If a recipient is liable for GST on an inward supply, then it has to come under GSTR 2 only, not GSTR 1. They want an Excel sheet. 2 rates how to upload.
Okay, please can you show on the screen in Excel how to record different rates mentioned with the same invoice number? The answer here is if you download the offline utility of the GSTN, it has a sample data entry. You can just adopt the same thing, import it, it works.
Okay, next question is RCM is applicable even on expenses already suffered GST expenses. That is claim of reimbursement of employees. One is if is already GST is applicable on it, and if the invoice is in the name of the company, no GST applicable once again.
Correct.
Okay, previous month purchases. Again, the previous month credit can be claimed before, you can be claimed in the subsequent month. Yes, if you are already registered person and you have missed taking the credit of the previous month, yes, you can take in the subsequent month, which you have to take care of the due date, that is September of next month or annual return, whichever is earlier. Question is not complete. The scheme changing, I think we have to see the registration formats.
Okay, okay.
Yes, sir. All other things are yours.
Okay.
Yes.
All right. So, Sonam Agarwal, if the tax amount in my inward invoice is wrongly calculated or rounded off the invoice, what should I do? Should I show the correct tax amount arising in the bill? The answer is yes. You should correct your GSTR 2. You have a modification option. Suresha, RCA mentioned in GSTR 3B. Where is it mentioned in GSTR 1? In which column? Now, again, we have repeated this answer. Inward supply is not in GSTR 1, but RCM 9.3 sales will be reported under GSTR 1. But all RCM purchases under GSTR 2 only. MS Shankar, we are an SEZ unit, we procure material from DTA without GST. We are an SEZ unit, okay. Customs is a non-EDA port. How do we declare purchases made by SEZ from a DTA? If the material procured locally by SEZ is rejected, do we have to pay GST on material being sent back to the vendor? Okay. Now let's look at this way. I'll answer it in general. SEZ is out of your GST purview. whenever a material is received by the SEZ, SEZ will not pay the taxes because the person will not raising the tax invoice. Even if he is paying with the duty, he is not collecting from the SEZ. Second, when SEZ is moving the material back to the DTA, there shall be moving out with bill of entry. When we are saying with bill of entry, the other person shall treat it as an imports and report it under purchases. Wherever the goods are not moving without bill of entry, SEZ will report it under their GSTR 1 and it is auto-populated to the other person. Ramesh, sir, I have paid tax wrongly in cess. I have reported help desk of GST but no reply. What is the procedure? We have seen you have to file your GST R3 table 14 claim for the refund. Mithul, in case we have purchased from a dealer whose turnover is below 1.5 crores and not required to submit HSN wise, then in that case, do we have to enter HSN detail for purchases in GSTR 2? Of course, yes. In the purchase invoice, you do not have the HSN. It is your duty to check what is the HSN rate, and if your turnover is more than 1.5, you have to report it. Nikhil Chandras, I have shown transitional credits in GSTR 3B. Is there any other credit under column 4 of serial number 5? I'm not sure which table you are talking. However, there is no transitional credits reporting neither under GSTR 1 or GSTR 2. Can we get this presentation for further reference? This presentation is available for download. CJO, where to show the DTA supply of services in GSTR 1 by SEZ unit located of Cochin, Kerala to a unit located outside the SEZ Kerala itself, whether under export tile of under B2B. So it's an interstate supply. It will be shown under interstate supply. However, I would request you to look at why are the goods moving out without bill of entry. Generally, any goods moving out of SEZ is as good as importing of goods within India. Deepthi Modi, if the rent paid for the guest house provided for employees, will it be allowed? Now, rent again, this is a subjective question. Rent is paid for the office purposes, so ideally it should be allowed. Look at back because it is used in the course of the business. We need to look at it. CS Swati, if motor vehicle is purchased for the business and used recorded in the books, will the ITC be available? 17 subsection 5, you will not get the input tax credit. Bhushan, if the fruits and vegetables which are exempt and exported out of India, it becomes zero rated due to definition, will it be eligible for refund of input taxes? Now, generally fruits and vegetables, they are not taxable. When you are buying, you don't pay the tax. Hypothetically, you are buying some fruits and vegetables with payment of taxes and there is a tax liability. Whenever you are exporting those goods, whatever the tax paid on those fruits and vegetables, you can get the input tax credit. Ramakrishna, cars are blocked in general, subject to exception. Is the tax paid on the car alone is blocked or also on the maintenance like repairs? Maintenance like repair is eligible, only the car is blocked. Keshav, whether RCM paid at 5% for GTA service eligible as an input tax credit? Answer is yes. You will be paying under 9(3), but it is eligible to you as an input tax credit. Santosh Soni, is there any reverse charge under job work? If yes, who is liable to pay the GST? Even under job work or any other activity, whenever you are taking in services or goods from an unregistered dealer, reverse charge is applicable. In case if the job worker is not registered, whatever is the amount you are paying, you are liable to pay GST. Nitin Goyal, whether interest payment, electricity bill payment, etc. needs to be shown under table 7 of GSTR 2. Answer is very much yes. It is an exempted purchases. You should be reporting under table 7 of your GSTR 2. Heath, what is the difference between nil rated and zero rated, which we have explained? 140 subsection 5 credit to be shown under which column of table 11? This is a transition reporting. It is not under GSTR 2. Nikhil Mittal, if I am filing GSTR 2 for my client, I found the details in GSTR 2A which is auto-populated from GSTR 1. Whereas when I am proceeding to file GSTR 2, I am unable to find the details in table GSTR 2. Let me know how to proceed. Answer is right now GSTR 2 completely it is not enabled. So once the GSTR 2A is complete, which is till the supplier filed the GSTR 1, though the data is not frozen. I may upload the data in my GSTR1, real time available in GSTR2A. I delete the data here, again real time data is going out of the GSTR2A. So only when I file my GSTR1, till that point GSTR2A is not present. So once the due date for GSTR2 comes, this data can be automatically fetched to GSTR2. R Shakti, where do I show my expenses under reverse charge payable, table 4 of GSTR2? Prashamsa, in GSTR1, table 12, is it compulsory in case of the person is service provider? This is applicable both for service provider or seller of the goods. Pavan Agrawal, whether import or imports from Bhutan, Nepal requires bill of entry and IGST has to be paid and claim ITC on the same. Every import IGST has to be paid and these are eligible for your input tax credits. Anushri Rati, bank is charging GST, can we claim input tax on it? Answer is yes. Pavan Kumar Agarwal, please give examples of exempted, nil rated, non-GST supply. We have dealt in detail. In case of reversal of ITC by calculating the eligible credits at the end of the year, if there is a liability which I need to pay with interest, that is D1 and D2, how do I come to know that month in which the liability belongs and calculate interest? Anjali, very interesting question and very beautiful question. Now, I said D1, D2 to be recalculated every year once, and at the time when you are making a recalculating, you should also add interest. Now, the question is, how do I know the interest coming to which period? Now, interest when you are recalculating, you know actual exempted and taxable turnover month on month. You will be redoing this computation month on month and you will be adjusting what is the amount you have paid. The months in which you have short paid, you will be computing interest from that date. Shobha M. Table 13 is mandatory for filing. If we ignore, what is the effect? So you are not complying with the general provisions of the Act. The general penalty clauses are applicable. Anjali, is it required to generate separate invoice series while preparing reverse charge invoice? The answer is you have to have separate series of invoices optional. So it is your taxable outward supplies, whether it is a forward charge or reverse charge, you can continue same series of invoices in your case. You can choose to have separate series of invoice if you want. However, having separate series of invoice, mandatory to report each series of invoice. Deepak Kumar, while filing GSTR 3B, SSC has incorrectly paid tax under cess instead of CGST. How to claim? How to claim back such incorrect paid cess? While filing your GSTR 3, you can claim the cess back. Anil V, ITC is more than OTC. What is OTC? How
output taxable.
Output
might be.
Okay. How should we show under GSTR C3? Please show a live example. Is it possible? Answer is very simple. One thing which everyone needs to know, I said there is a MAT. The MAT is reverse charge, whatever is a liability, so much has to be paid in cash. Even otherwise, your input tax credit is higher than output tax liability. Wherever your input tax credit is more than output tax liability, system will automatically populate it. You do nothing. In your tax payable column of your table 12, you have the adjustment of this output tax to your input tax. You will manually adjust it. There is no necessity to pay cash. Deepak Kumar, a dealer has reported purchases and sales details of concern A. The question is very incomplete. Amog, bank charges, can we claim the credit? Answer is yes. Srinivasan, where do we have done our GST registration in January 2017. GST registration January 2017, okay. But if I check my GST profile, it shows GST status active pending verification. Okay, it's a case of migration. The migration case, the status is shown as pending verification. This would be completed by the department very soon. Genal, reverse charge paid in the month of July. Will I get the credit of that in the month of July or August? How will it be reflected in GSTR 2? It will be, you will be getting the credit in the month of July itself, and the credit is auto populated in your credit ledger. Prabha, whether we can claim refund of late filing fee 600 already paid in respect of 3B. Now, whatever the late filing fee which is paid by way of 3B which is paid, when you file your GSTR 3, where the system will show the late filing fee, you after adjusting, if at all there is a late filing under GSTR 3, this becomes a free cash. You can take a refund while filing your GSTR 3. Prabha, Pranay Agarwal, whether salary paid to staff will have to be considered in GSTR 2. If yes, where answer is no, it is a schedule 3, you need not do any reporting. SV Rao, whether GST zero rated supply without payment of tax. It could be with payment of tax, without payment of tax, basis on whether you are executing an LUT bond and whether you are not eligible for it. Vanaja, what are the consequences of HSN details not filing? This is a common question which is coming up. HSN details not filed is a general violation of the procedures. Any general violation, there is a general penalty applicable. Department may choose to apply the penalty for not complying with the provisions of the Act. Jinali, bill of entry is done in the June but the goods received in the month of July. Whether credit note and credit notes issued in the month of July were to be shown under GST or revised return under VAT. Now any transactions of the June which is coming into the July month, these are the transitional credits. 140 subsection 5, you have to report under transitional return, not under the current returns.
Add to it, if you have received a invoice in the month of June also, only the credit note in the month of July. If we see the table 9 where you are entering the credit note or debit note, it will ask you whether it is a pre-GST. If you click on the pre-GST, it will allow you to do the modifications also. Okay.
Deepak Kumar, in respect of sale of diamond jewelry, quantity will have gold contents in grams, diamonds and gold in grams and diamonds in carats. How to report in unit of measurement in bill-wise sales? So this question is pretty simple. Now when you are reporting your GSTR 2 in your table 3, you are not in your sales GSTR 1, your table 4, you are only reporting invoice details as invoice number, date, value and taxable. You are not reporting any quantity. However, when you are going to table 12 HSN wise summary, you are giving HSN wise then the quantity. There you will be, for your diamonds you will be selecting carats, for your gold you will be selecting grams, you will be writing value and quantity under that table. Vijay Lakshmi, in case of RCM, reversal of ITC in the same month, recredit option is available under GST. That recredit option is having any time limit for making payment. Now RCM liability has to be paid in cash. In case if you are not making RCM liability in cash and you are filing your returns, it is like invalid return. So the credit is not available. Any credit which you are taking is only provisionally available. Since you have not discharged this liability, the credit which you have taken is also becomes an ineligible credit. Sri Harsha, for banks and other entities, should we include interest paid and interest received under exempt inward and outward supply? Answer is yes. Vivek, in GSTR 1, where to report B2B nil rated exempted supply, say we have B2B table, nil rated table or both. GSTR 1, we should only report taxable B2B outward supply. Exempted supply, you have a separate table for reporting your exempted supply. Prabha, a registered dealer in Tamil Nadu has a commercial property in Kolkata. Whether such dealer can raise, we have answered the same question in case of Haryana and Delhi. MS Shankar, do we have to disclose interest income on deposits with bank in return? Answer is yes. If yes, where to provide the details? It is an exempted income. Report it under exempted income table. Karthik Reddy, I have disclosed the taxable outward supply in GSTR 1, which were not shown in 3B. Consequently, my tax liability increased, but the same has not appearing in my liability ledger. How to discharge the tax liability? Right now, GSTR 3 has not commenced. GSTR 2 has to be completed, then GSTR 3. At that point, your offsetting liability, your interest will be calculated from the date in which 25th you are supposed to pay from that date. For the differential portion, the interest will be calculated. Deepak Kumar, whether IGST bill can be raised for professional services rendered for Chennai branch at the request of their HO at Delhi, though the place of supply is Tamil Nadu. Whether the IGST bill can be raised at the request of HO. Now, this is again a subject related question. Look at place of supply and the location of supplier. If the location of supplier and the place of supply is in the same state, then raise C plus S, else it is IGST. When you are entering in the table in the GSTR 1 table 4, the moment you enter the GSTIN of your recipient, the place of supply is automatically determined and C plus S would come. But you also have an option to manually change the override that place of supply and change it to a different state. Then it would be changed to IGST or C plus S accordingly. Murali Lal Agarwal, how can I mention quantity in HSN summary? It is a data entry option available. Kumar, and by mistake making payment of CGST, I have wrongly remitted cess. claim a refund under Gst R3. Shankar, yes. In one case, provisional registration obtained but afterwards cancelled by department, unable to log in. How to solve this? Please go to your jurisdiction officer and CBC Mitra. Anand, how to deal with sale of capital goods if sold within the given period? Life of asset, how to deal with the credit of it? Now, whatever the goods which you have taken and you are making a sale of it. So I said capital goods, you get the credit in the portion of 5 years. So divide by 60. The period in which you have utilized it, you are eligible for the credit. At the time of sales, you have to reverse that credit to the balance unutilized period. What is the difference between exempted nil rate? We have seen it. Anand, where to report GTA in GST R2? If a GTA is reported, he will be showing under outward supply under GST R1. So it is auto populated. If the GTA is not registered, it is an RCM purchase of 9.3 only. You should report under table 4A only under GST R2, where it is inward supply, where the registered is liable to, receiver is liable to pay taxes. Sanjeev, kindly clarify IGST to be utilized offset against CGST, SGST liability. Now here I said IGST credit can be first offset with IGST liability, balance offset with CGST liability, then move to SGST. There were many situations where users were trying to enter partially to IGST, partially to CGST to ensure whatever the payments which they have made. System do not allow that way. You offset all the credits, then you can proceed on to adjusting your liability against the cash. How do I get the PPT? PPT can be downloaded online. Rajesh Agarwal, in GSTR 2 point number 7, if purchases from the composition dealer. So any purchases from the composition dealer, again it has to be reported under table 7, composition only. Amog, in GSTR 1, should we upload each and every bill for exempted goods? Answer is no. Amog, again, banking charges, can we take the input tax credit? Answer is yes. So with this, we have answered all your questions. Thank you so much for your listening. Thank you.
Thank you.